Yeah.
Pretty much immediately upon arriving. Of course, the India relationship also is one that has proven to be very important for this administration.
It's been pretty remarkable as we bring in John Sitalides in our conversation, principal at Trilogy Advisors and a consultant, diplomacy consultant at the State Department. John, great to have you with us. You have to smile for the camera now on Sound On.
Thanks for having me.
Thanks for being here.
Great to be here.
Absolutely. If you want to join us, by the way, on our YouTube simulcast, we invite you. Get to YouTube and search Bloomberg Global News. Join us here in studio. Be part of the family. If you're listening on the radio or satellite radio for that matter, we welcome you as always. There have been a lot of questions about the goals for Joe Biden at this gathering here. All the while, India is advertising on billboards that, hey, not only are we back, but we're stronger than ever. We're hosting the G20. We are something to be reckoned with. There's a huge opportunity here without Vladimir Putin or President Xi in the room for Joe Biden to embrace Modi, to Kayleigh's point, and get some traction here. Can he do it this weekend?
Well, he's certainly going to give it his best. There are probably four larger goals here, I would say, for President Biden on this trip. One is clearly to enhance the U.S.-India relationship. This is not going to be an alliance, but it's going to be one of the most important strategic partnerships for the United States on the global stage. And he received Prime Minister Narendra Modi quite well here at the White House not too long ago, and is being reciprocated now. I think also President Biden has to make sure that he's able to rebuild American relations with the so-called global South, especially after the COVID lockdowns. Many of these countries feel that they were marginalized by the U.S. and the West. And these are countries that are going to be very important in multilateral institutions, especially the United Nations, in dealing with the U.S.-China competition and the Russia-Ukraine war. Third, obviously, President Biden wants to counter China's growing influence with the global South and look to present the U.S. and the West as the viable alternative for technology, for infrastructure, and for a clean network, a la the Trump administration's policies that have pretty much been carried over into the Biden administration. And fourth and lastly here, I would say, to try to expand the pro-Ukraine coalition. Most of these countries outside of Europe and, say, Japan and South Korea and Asia have largely sat out the Ukraine war. They see it basically as an intra-European, intra-Slavic war. They're indifferent to what's happening in Ukraine for the most part because they depend on Russia for oil, coal, gas, food, fertilizer, and frankly, weapons. And remember, Russia has military cooperation agreements with 20 countries in Africa alone. So these countries are not going to risk this very valuable relationship with Russia over America's and Europe's stance in Ukraine. So it's a tall order. He's got a number of objectives, and we'll see what he can pull off in the next 48 hours.
Just on the subject of Ukraine, I have to wonder, as Biden is trying to talk to other countries, try to shore up arms, ammunition, just support in general, funding, if his credibility is hit by the conversation around Ukraine funding that's happening domestically in the government that he sits at the helm of. He sits in the Oval Office, obviously, is asking for more support for Ukraine, north of $20 billion in a supplemental, and yet down the road on Capitol Hill, there's no guarantee that they're actually going to give that to him. What does all that noise mean, and how does it influence his messaging to other countries?
It's a tough one because he has to be able to, as you say, project power and decisiveness, but at the same time, the United States operates as a democracy. And so we have checks and balances, and the Republicans control the House, and a large part of the Republican base is concerned about additional aid to Ukraine on the scale of what we've done over the past year and a half. And I think actually you'll start to see this in some of the more sort of pro-left media, that they're also beginning to wonder how long this level of aid can be sustained. But right now, it is mostly the Republican members of the House. So this is the upside and the downside of democracy at play. But it looks like most of the Republican leadership, especially in the Senate, from Mitch McConnell on down, are in favor of supporting the president's next tranche of Ukraine aid. But it's just the nature of the business. There's really not much he can do to get around it, except to say that he's doing his best. And if he prevails, it'll be a sign of strength in favor of the president.
Part of our approach to Ukraine is, of course, starving Russia. To what extent can Joe Biden turn Modi away from Putin in the conversations that they'll have this weekend?
My own sense, it's going to be extremely difficult. First of all, we not only are failing to starve Russia, but Russia's GDP will grow in 2023. They have figured out a way, and they've dealt with other countries, rogue countries like Iran and Venezuela, how to circumvent American sanctions, financial sanctions, energy sanctions, and the like. But I think also what you see happening right now is that a country like India has had long-standing, decades-long relations with the former Soviet Union, now Russia, again, on energy, hydrocarbons. It's actually ramped up its oil and coal purchases more than almost any other country in the world since the war began. Also, long-standing weapons relations. The Russians are exceptional arms merchants, and the Indians have been one of their best clients. And I think also for India, it's important that they be seen, and they want to be an independent party. They don't want to be a junior partner of the United States. Right. They have to balance their relations with Russia, with China, even though they have these very difficult tensions, border clashes, and India is very much concerned about the Chinese Navy's ability to project power in the Indian Ocean in the years to come. But they also do not see themselves as a junior partner of the U.S., as would be, say, Japan or Germany. They want to assert their rise to regional power status in the years ahead. So they're going to balance all of these interests and trade relationships very carefully.
Just to your point on the Russian economy, within the last hour, we got their macroeconomic forecast from Russia, what they policymakers in the country think GDP is going to do. They think it's going to grow for the next 3 years, despite the sanctions, despite the war. So certainly interesting. I want to return to the point you were making earlier about the global south and how this is going to be a big effort on the part of the Biden administration at this summit. And a lot of this is related to financing, right? Reforming the World Bank, the International Monetary Fund, providing sources of funding to these emerging economies that aren't Belt and Road, right? This is what that's about. How hard is that to accomplish?
Well, first of all, this is long overdue. I mean, we're playing catch up with the People's Republic of China that has issued about $1 trillion worth of loans and different forms of credit assistance to about 130 countries for infrastructure projects worldwide. So we're talking now about, I think, $200 billion. Is that the figure that's being talked about in terms of World Bank and IMF available additional funds? But it's also a matter of the kind of process that's used to help these countries develop. We actually have, we believe, higher quality infrastructure and telecommunications products and services in the West than what comes out of China. They tend to export their labor. They tend to extract natural resources. It's not really a beneficial arrangement for many of these countries, besides many of these white elephants that are built. And so I think one of the difficult messages for President Biden to be able to sell to these countries is that you have higher quality, even if it's a little bit more expensive, higher quality, and it's less corrupt of a process so that you don't have the kind of corruption that China has fostered through the Belt Road Initiative, because the Chinese money comes with no conditions, no pesky lectures about human rights or environmental or labor standards or anything along those lines. And it's not just the president. I think also our European and G7 partners have to promote this idea that long-term trade and security and economic development will advance far more healthily in relations with the West than with a country like China, which is more of an extractive country than a cooperative country.
We're spending time with John Sidolides from Trilogy Advisors. I'm not trying to provoke you here, but I will. If President Xi, President Putin are not at the G20, what is the point exactly of the G20? Why not just have a NATO meeting?
Well, because many of the countries that are there have nothing to do with NATO.
I know that you're going to tell me that, but if they're not moving the needle on these relationships, Joe Biden's going over there to shore up support for Ukraine, isn't he? That's really the primary goal here, which is something that he's done in any number of NATO meetings. But if the G20 is not fully represented, does that weaken the body?
It depends on what the outcome is here, and I think there's a lot of diplomatic energy that's being expended in trying to forge a joint communique, especially on Ukraine, and they're finding great difficulty there because China will likely back Russia on most of the language debates. But there is still very much of an important global platform that's being played out here. And this really is, if not a merger, at least a coming together of the advanced industrialized countries of the West and the global South that's becoming more and more prominent as a player on the world stage.
So this is more important than it was, not less.
I would say in many ways the G20 process is more important today than ever.
Yeah.
These countries are where most of the population growth will take place, most of the energy demand will take place in the years to come, and where there's going to be tremendous economic development. I mean, there are emerging markets that are already at 4, 5, 6% growth rates for the next half decade or so, far greater than anything in Europe to speak of. So I think we need to engage these countries well. We need to make sure that they do not become partners of China in ways that are inimical for their own development and for global diplomacy. And so I think it's very important that President Biden is there, as many countries from the advanced industrial north or west are there as well, and to look to see how they can come together on many of these issues, and to see where someone like Prime Minister Modi is able to serve or to position India as an effective bridge between the West and the South, which is where he's looking to position India, again, to keep it independent, not be an alliance partner of the United States, but also not necessarily harm relations with China or Russia in any ways that are inimical to India's own tremendous growth potential. So a very, very complex array of interests and objectives at play here.
That's for sure.
Well, and one of them is on climate. I mean, we talk about India and China. These are huge global emitters. And you were talking about the difficulty of finding agreement on the language in the communique. Our understanding, based on our reporting here at Bloomberg, is also that China has taken issue with some of the climate measures involved in that. I imagine this is going to feature pretty heavily at the summit as well. How hard is the climate issue for these countries to navigate, given that outsized roles are played by India and China?
I think they're going to be far more difficult than we would like to see. First of all, China, I think, talks a good talk, but doesn't really put up when it comes to climate. I mean, right now they were able to finagle for themselves a carbon-emitting role where they're not going to peak until 2030, and then we'll see to what extent they actually do begin to change their regulatory framework to bring carbon emissions down. But they're still a developing country under the World Trade Organization, and they claim this as a privilege to be able to grow their economy as they need to. And they're still putting out coal plants about an average of 1 a week, even as they continue to advance on electric vehicles and wind and solar power. And India also will likely become or remain very hydrocarbon dependent for as long as they feel it takes to get their economy to where it needs to be. Now, with a number of other countries around the world where they feel that their societies are being affected by climate change, there'll be a negotiation here. But how much capital is there really available in the United States, right? We're soon going to have $1 trillion debt payments every year, $1 trillion. So how much are American taxpayers willing to transfer over to South America and Africa and South Asia for so-called climate resolution policies that are completely untested? So I think it's going to be a very, very difficult, tangible process. There's going to be a lot of great rhetoric here and a lot of shared goals. But again, I think India will play a very important role here because they need to be able to develop their economy as cleanly as possible, given where they're starting from at this point. And if they can promote climate policies as part of a multilateral solution process, they'll have achieved a major victory here.
John, we have less than a minute. It's interesting when you consider our trade relationship with China, the second largest economy in the world, as we're reminded, not our top trading partner, however. We do more business with Canada and Mexico.
Yes.
You look 5 years down the road, where will China be on the food chain there in terms of trading partners with the U.S.?
First of all, it depends, I think.
Higher or lower than where it is now?
I don't know. I can't forecast that, and I'm not sure anyone safely can. I mean, there's already a lot of sort of long-term gloomy prospecting about China's economy.
Yeah.
I don't know how much of this is short-term and how much of this is long-term.
Yes,
we'll have to see what happens
trying
there.
to figure this out right now.
But the bottom line is I think the U.S., most Americans undervalue the relationship that we have with Canada and Mexico.
Sure
They're our
do.
peaceful neighbors. They need to be as prosperous as possible. We need to ramp up those economic
Yes.
trade ties.
I think that's the point that we take out of this conversation, John. Thank you so much. He is a diplomacy consultant for the State Department, and he's all ours today on Sound On, a conversation you won't hear anywhere else with John Sitilides. Alongside Kaylee Lyons, I'm Joe Matthew in Washington. Thanks for being with us. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks higher with the S&P up now by 5 points, up by about 0.1%. The S&P 500 index is about to break a 3-day losing streak. For the week, however, holiday shortened week, we're looking at a loss right now of 1.3% for the S&P 500 index. So here's where we stand with the Dow, up 53 points, up by about 0.2%. Again, the S&P right now up 0.1%, still below 4,500. Nasdaq up 17, a gain there of 0.1%. 10-year yield at 4.25% with a 2-year at 4.97%. Spot gold, little change, just about flat on the day right now at $19.20 the ounce. Gold up 42 cents. West Texas Intermediate crude up 0.8%. 87.55 for a barrel. Brent up 0.9%. 90.68 for a barrel of Brent. Again, recapping, stocks are higher. We've got the S&P up by 3 points, up 0.1%. Apple shares rebounding today, up by 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
This is the eve of the grand debate in Washington. Even though you thought we had it already, House members return next week. They'll join their friends in the Senate here in Washington. And we're going to go through a whole debate over funding the government, even though that already happened kind of in the debt ceiling deal, which Kaylee Lines appears to have fallen apart because everybody's got an ask for something.
Yeah.
Nobody's happy right now. And everyone thinks we're going to have a government shutdown at some point.
At some point, it becomes a question of when, because theoretically it could happen as soon as October 1st. It's September 30th when funding runs out.
Yep.
But if they can do a continuing resolution, and I stress if, because that is not a given. It's going to be hard for Speaker McCarthy to figure out something that works within his body in the House that also will get approved by the Senate. But in theory, if you get a CR, could bump it out to early November, mid-November.
Right. Yep.
And then do the whole song and dance over again. It's the constant kicking of the can down the road
Yes.
that we do here in Washington.
And then we'll have a big freak out right before the holidays and see what happens then.
Merry
But even the CR, to your point, the stopgap, appears to be threatened by this move that Speaker McCarthy wants to use to attach the supplemental request for Ukraine funding to a border security bill.
Right.
And this is already starting to upset the cart. You've also got the matter of an impeachment inquiry that many Republicans, like Marjorie Taylor Greene, would like to see. Even Speaker McCarthy has been walking up to the line on that. He says it's time to do it. Marjorie Taylor Greene, among others, I think maybe Matt Gaetz and company, sort of like the super friends of the House Republican caucus. They say no funding without impeachment.
I've already decided I will not vote to fund the government unless we have passed an impeachment inquiry on Joe Biden.
Big round of applause at the town hall for that. But now apparently some conservative Republican members of the House are kind of upset about the way this is going, and that's where we start with Ryan Teague Beckwith, Bloomberg Politics reporter. I know nobody has a sense of where this is going, but the noise is getting louder and does seem like a shutdown is in store. What do you think?
Yeah, I mean, an interesting moment to me was this morning Ron DeSantis was asked about those comments from Marjorie Taylor Greene in an interview on Fox News, and he said, basically, they asked him, would you tie the shutdown to impeachment? And he said that he liked the impeachment inquiry and thought that they'd uncovered a lot and they should do that. And then he also said they should have a big spending fight. So he didn't exactly say yes, but he didn't say no. And he seemed to say that both things seemed like good ideas.
You got some Republicans like Ken Buck, though, who are saying, where's the evidence? Are we really doing this?
I don't know that they're going to actually do the impeachment. I don't think that McCarthy wants that. I think they like keeping it out there as like we're going to continue to investigate this kind of thing. An actual impeachment triggers just a whole nightmare of things that you have to do then to go through with the impeachment and then potential Senate trial and all of that. And they don't actually want to do that because they don't have the evidence that they would need to make that kind of case, and they don't have the votes there, and that's just a big mess. But I think threatening it is a useful rhetorical strategy for showing that you take this seriously or that it's a serious matter.
To your point about this would also have to go to a trial in the Senate. Senator Mitch McConnell, who leads the Republicans there, also doesn't seem to like this idea of impeaching President Biden. He doesn't think this is a precedent that should be set, especially as former President Trump was already impeached twice. And that's just one example of what feels like to me, and correct me if I'm wrong, Ryan, is a growing gap between Republicans in the House and Republicans in the Senate, and on the funding and Ukraine issue as well.
Yeah, I mean, I think the problem for House Republicans is just that it's such a narrow majority that it really doesn't take many people to cause trouble. And so, yeah, I mean, you've got Marjorie Taylor Greene, then what? You need, 4 more people?
Yeah.
And the only way to get around that is to do something with Democrats, which that he can only do that so many times before he loses his caucus. So it's possible that he could, cobble something together, get Democrats to agree that they'll go along with it and have the votes for it that way, but that's going to start to anger Republicans. So I think that's why you're also seeing Chip Roy kind of suddenly really active on Twitter and posting, lots of hey, what about me kind of tweets, indicating that maybe he would be the fighter they need. I don't think he has the votes there, but, clearly there's a lot of jostling going on right now.
I'm glad you mentioned Chip Roy. Did you see this tweet, Kaylee? He writes, to the House GOP, hiding behind impeachment to screw America with status quo massive funding of COVID border DOJ and DOJ tyrants will not end well. I guess that's why they threw Marjorie Taylor Greene out of the Freedom Caucus.
Yeah, I mean, this is what I'm saying. You can't cobble together a majority behind that position either. Amazing. So there's a persistent problem with the extremely conservative members of the House Republican caucus of knowing what's possible. Mm-hmm. I don't think that it's a group that's consistently kind of made demands that just they cannot actually meet themselves. And I think the problem is that it raises expectations among voters that, well, if they're saying this kind of thing, then they can follow through on it. Yeah. And they can't. They don't have the votes, and they don't have the Senate, and they don't have the White House. So what next? And that's a persistent problem.
Yeah, persistent. It's like deja vu all over again frequently when it comes to a lot of these fights. Speaking of deja vu, Ryan, COVID's back. I don't think it ever really went away. But in a more material way, cases are on the rise. Are we going to see a reigniting of the fight over the appropriate response to that? We already had a lot of questions this week about President Biden and whether or not he was masking in the appropriate way, given the First Lady tested positive. I mean, are we going to see deja vu again on this?
There are clearly a lot of Republicans who kind of want to have the fight again. The COVID fights over masks and schools were very good for some individual Republicans' fortunes. I mean, I think there's a case to be made that it helped elevate Ron DeSantis to where he is today, and that in part some of the struggles that he's having right now are because he's kind of lacking a similar sort of issue that he can ride. I think he tried to turn woke into the new coronavirus, but it just wasn't.
Didn't land.
It just didn't land the same. There was a small Maryland school district that asked for elementary school kids to mask up.
We were just talking about this.
And I mean, I watch the cable news shows in the morning every day for several hours. And I mean, they were really trying hard to make this like a national issue.
Yes,
it's like a single school district.
Because Ted Cruz sent a tweet about it.
I mean, he was late to it. I mean, there were people way ahead of that trying to make this a thing.
This is the Rosemary Elementary School in Silver Spring, Maryland. One classroom, they're masking up because a number of students in that class got COVID. Ted Cruz tweets, retweeting a local reporter who was covering this at NBC. If you want to voluntarily wear a mask, fine, but leave our kids the hell alone. And they've got indoor recess today and police at the school for security.
Yeah, I mean, I think that there's really not an appetite right now among lawmakers and public health officials, or really anyone, to go back to the kinds of mask mandates or shutting down churches or whatever. And even amid the current coronavirus, outbreaks that we're seeing, which are serious, but not, at the level that we were during the pandemic. But there is kind of some people who kind of want to have that fight again because it was a good fight. It riled people up, and it realigned the coalitions a little bit. I mean, I think you saw, like with Glenn Youngkin's win in Virginia, like there was a lot of movement on education because there were a lot of parents who were frustrated during the pandemic about education, and that gave Republicans an opening on that issue. I don't know that they have that same leverage right now on education.
Remember Ron DeSantis' big moment at the debate, Kaylee?
Yeah.
When he was, blocking everyone else out on the stage, and he pulled a Donald Trump. He said, "Anthony Fauci, you're fired," and he got a pretty big round of applause. He's gone now, and they're still talking about him.
Yeah, I mean, and they had an argument. There was a little proxy fight. Donald Trump was on Hugh Hewitt's show this week and brought up how Ron DeSantis shut down the beaches at some point, and then Ron DeSantis was responding to him. And, I think the juice is not there anymore for this as a political issue. But it is enough of there's a small group of people that this really animates and that still are kind of angry about it. And they're still, so I think in a Republican primary where you're really scrapping to try to,
Use what you got.
Make it up, then they're going to find ways to keep bringing this up. I don't think it's really breaking through as a broader issue. I think the rest of the country's moved on.
Well, depending on what is happening with cases, Joe, I wonder if this is raised at the next primary debate, which is only now a few weeks away.
It's a great point. They're apparently about to approve a new series of vaccines for the next strain. So this is going to be back in the news, and everyone's going to be talking about it. Leave our kids the hell.
I mean, we had a debate about vaccines in 2016, if you recall. They came up at a Republican debate.
A long time ago now.
And it is a persistent. It's like I said, it's for certain people. It's a very animating issue, and I think we've seen in politics that there's a lot of issues where public opinion is broadly on one side, but for the people who think the other way, it's like they're single issue voters. Mm-hmm. So. It may be that it's become something like that kind of an issue where it just animates that crucial block of people who are mad about vaccines now sort of permanently.
We talk every week at this time with Ryan Teague Beckwith, Bloomberg politics reporter. Great to see you, Ryan, and thanks for coming over. Let's get a check on world and national news now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden is now in India, where he will be participating in the G20 summit this weekend. White House National Security Advisor Jake Sullivan spoke on Air Force One about the issues that will likely be coming up.
From climate to energy security to food security to global macroeconomic stability to being able to deliver public goods to people everywhere.
Sullivan says President Biden will also be meeting informally with leaders on the sidelines of the summit. The climate is expected to be one topic to come up. A new UN assessment on global emissions shows countries are largely failing to meet their commitments, putting the planet on course for catastrophic global warming. The report released today says governments must rapidly find a way to cut billions of tons of carbon dioxide. Top defense officials today are honoring those lost in the 9/11 terrorist attacks. Deputy Defense Secretary Kathleen Hicks hosted an observance ceremony today at the Pentagon in Arlington. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long. The union says thanks, but no thanks. Stellantis is facing pushback on its latest offer to unionized employees after a top United Auto Workers leader said the carmaker's wage increase was not adequate, less than a week ahead of a strike deadline. Stocks holding on to gains. The S&P now little changed, up less than 0.1%. S&P edging higher after a 3-day drop. The S&P right now up by just 3 points. We've got the Dow up 37, up 0.1%. NASDAQ, the composite index, up 9 points, a gain there of just under 0.1%. 10-year yield 4.25% with a 2-year that's yielding 4.97%. Spot gold up 12 cents the ounce to $19.19. Little change there. And West Texas Intermediate crude up 0.7%, 87.47 for a barrel of West Texas Intermediate crude. So we are looking at an update today, but what about the market outlook for the rest of the year? Deepak Puri is Chief Investment Officer for the Americas at DWS Investment Management.
The reason, our target is on S&P is 4,500, which is not that, exciting from where we are today, is primarily driven the fact that, yes, we might see earnings growth, and our estimate is 7% next year, but we might not see the sort of liquidity backdrop that we have seen this year. So hence, a little bit of an earnings pickup, so $235 on the S&P, but a lower multiple that leads us to 4,500 on the S&P.
And right now we've got the S&P at 44.55. And by the way, you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Virgin Galactic Holdings has launched its third commercial flight, sending another crew of paying tourists to the edge of space and back. Today, we are looking at shares of Virgin Galactic Holdings, SPCE, the ticker, by the way, that stock down now by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
So I guess it's 3 up and 2 down at this point. No, actually, it's all of them. It's 3 up and 3 down, Kaylee Lines. The breaking news here that the UAW has just rejected a contract offer from Stellantis, saying it wasn't adequate. This did not come from Sean Fain, though, who actually threw Ford's contract proposal in a garbage can. I guess this would be the symbolic version of that.
Yeah. Rick Boyer, vice president and head of the UAW's Stellantis department, said that this wasn't adequate. What Stellantis was offering is wage increases of 14.5% to most union employees. But remember, Joe, where the union started was they wanted up 46%.
Yes, right.
And none of the car makers thus far have frankly come anywhere close to that. And hence you're getting the union pushback. And we are now less than a week out from a potential strike of all 3 big automakers at the same time.
That would be a week from today, right? The 15th. So at midnight next Thursday is when this could be triggered. They've already authorized the strike. We've heard from GM, Ford, now Stellantis, all 3 rejected.
Yeah.
So this is not looking good.
And it's getting down to the wire here.
We wanted to talk to a car guy named David Weston, who joins us from world headquarters in New York. Our conversation every week at this time. Hey, David, I bring this up because, of course, you grew up in Flint, Michigan. Your dad worked in the car business. You're, of course, one of the most important voices on Wall Street, and all of these stories collide at your desk at Bloomberg here. Are we looking at a strike in a week?
So it's great to be with you. It's all true except for the most important voice in Wall Street. I'll demur that. But yeah, my dad was an AC spark plug, and when I was a kid, I mean, he would go out on strike when they would go out on strike against GM because AC spark plug was owned by them. It's a terrible situation and different perhaps from what we've seen before. We used to go through these all the time, and one of the car companies gets struck be out for 3 weeks or 4 weeks, and then they all come back again. But this time, the parties are so far apart in what they're saying, and as you pointed out, what Sean Fain has said has been so far out there. You also have a president who prides himself in being the most pro-union president in history, and you're really fixing for a problem. You know, if you remember last week, we had Steve Ratner on Wall Street Week, and he, of course, was the so-called car czar for President Obama, where they bailed out the car companies. And he said it's not just a gap between these two; it is really the Pacific Ocean. He is very concerned. He thinks, if anything, it's more likely than not, we will have that strike. And by the way, Sean Fain right now is saying we'll go out with all three at the same time, which you do not see.
Yeah, 150,000 workers potentially could be striking. It could be huge. And to your point about how this is different than what we've seen before, this also, to me, is about an actual shift in what the world looks like and what transportation looks like. It's electric vehicles and the electrification of the auto industry that is at issue here for a lot of these workers. And that's another area, David, where it seems like the president's pro-union agenda is running into conflict with his climate agenda simultaneously. Is that your read on it as well?
Well, Sean Fain has specifically said that, Kaylee, has said the president's not paying enough attention to the EV situation and what that's really doing. And you do have sort of a parallel between the Writers Guild on the one side with the SAG-AFTRA and the automakers on the other. In the case of the automakers, it's EVs. In the case of the writers, as well as the actors, it's the AI situation. But you have a fundamental technological shift going on at the same time. You've had inflation really drive things up, and people feel a pent-up demand for wage increases. By the way, one last point, Steve Ratner says it's not the wage increase so much, it's the work rules. That's really where the danger is, because the demands go way, way beyond substantial wage increases.
Well, before we're all replaced by AI, and I'm ready for that at any moment, you're tackling that issue on Wall Street Week later, and I'm fascinated by this idea of tackling this as a global issue, David, because we're going out of our way to keep AI technology out of the hands of countries like China. How do you approach this from a global standpoint?
Well, you're right. We addressed this week on Wall Street in two ways, actually. We have Mustafa Suleyman, who was a co-founder of DeepMind. Remember, Google bought them. That's a lot of the Google artificial intelligence, who's written a new book called The Coming Wave. And he basically says, and this is not too stark the way he puts it, AI has the potential either to make the world over in ways we can't imagine and save us from things like climate control, or destroy the world as we know it. And it's got to be up to nation states getting together globally to get that job done. At the same time, we also had historian Neil Ferguson on, and he is, of course, from the Hoover Institution, and he said times of wasting. We really are up against a deadline. The nation states are up against a deadline if they're going to get their arms around it. This is what he had to say.
I'm afraid we're entering the danger zone where bad actors are going to take advantage of things like deep fakes, and it's going to take the states much too long to catch up. I'll give you just one example before we run out of time. Think what AI can do to the 2024 election. I mean, if you thought social media made 2016 kind of crazy, I think you ain't seen nothing yet.
It's interesting. One of the things that he has in his book, Suleyman does, Mustafa Suleyman, is actually posits an election in which AI can figure out what exactly will make you change your vote and give you that. I mean, he says it could get that bad.
That's a terrifying proposition.
No, it's a terrifying book.
As a journalist, David, who has to cover the 2024 race and understand what truth is and what truth isn't, it's going to be incredibly difficult to do that. To your point about how you're being told that this has to be a global conversation with different countries around the world, doesn't it also have to involve the companies that are making this technology? Just next week, Senator Chuck Schumer is holding a closed-door meeting with the likes of Elon Musk, Zuckerberg, Sundar Pichai from Alphabet, all of these people coming to talk to them about AI, because at the end of the day, Washington's not going to move fast enough, right? The companies are going to kind of have to police themselves for a while.
You're just so right, Kaylee. In fact, again, going back to the book, he basically says, Mustafa Suleyman says, that essentially some of the large tech companies play the role of nation states here. He likens it to the East India Company from Britain, right, back in the 19th century, occupying India. And you have to have them play as nation states along with the nation states to really get their arms around it. That's exactly what he posits. Also, he talks about having basically a non-proliferation agreement between China and the United States, the two leaders, where they actually get together and say, there are certain things we won't do. We won't go that far the way we did with nuclear weapons.
I'll be curious to take your temperature next week, David, as we're coming off the G20, where all of these conversations will be continued over the weekend and into next week. We look forward to this conversation every Friday. David, great to see you. We'll be watching Wall Street Week on Bloomberg TV and, of course, listening on Bloomberg Radio right after Balance of Power at 6 p.m. Wall Street time. We do hope you have a great weekend. This is a conversation, Kaylee, that you can have on Wall Street. You can have it at the Pentagon. You can have it on Capitol Hill.
Everywhere.
But nobody can get their arms around it.
Right.
AI.
And again, terrifying to me.
Well, sure, yeah. You know, maybe we'll have to start reminding people that we're human beings at some point. But this really is Kaylee. I'm Joe. We dare the computers to replace us. Final thoughts coming up next on the fastest show in politics. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Kroger and Albertsons have agreed to sell 413 stores to C&S wholesale grocers in a divestiture that is designed to help win antitrust approval for their $24.6 billion merger. Now, C&S is going to pay about $1.9 billion in cash for the stores, which are mostly located in the west and middle of the country, closely held. C&S is a major grocery wholesaler that also operates Grand Union and Piggly Wiggly stores. Apple is unveiling its newest iPhone next week as the tech giant contends with a growing ban on iPhone use among government workers and a contentious new phone from China's Huawei Technologies that is providing homegrown competition. Dan Ives is senior equity analyst at Wedbush Securities, and he is sticking with his $230 price target on Apple shares despite China concerns.
Look, it keeps coming down to, if you look at the chip, you look at the camera technology, combined with the types of promotions we're going to see from carriers, especially in the U.S., and then you look at 25% of the install base has not upgraded their iPhone in 4+ years. I believe it relates into something where you're going to see actually an uptick in units over iPhone 14. And that's why we're buyers of the stock here, despite haters continuing to hate.
Indeed sees the iPhone 15 sparking a lot of interest. Apple shares today, they're up right now by 0.3%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
As our little heat wave continues in Washington, D.C., it's hot, waiting for House members to come back next week, and it's about to get a lot hotter. We'll talk more about that starting on Monday here on Sound On. Let's get a check on world and national news right now before some final thoughts with Kaylee Lyons. Here's Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Senator Nancy Pelosi, at the age of 83, says she will run for re-election next year.
Pelosi has plainly enjoyed her reduced workload since she gave up the Democratic leadership. He's been a strong supporter of Ukraine and critic of China, as she made clear in a recent Bloomberg interview.
China has been transferring technology of weapons of mass destruction to rogue countries. They've been violated almost every standard of access, of piracy. Need I tell you, Hong Kong, Tibet, Uyghurs, threat to Taiwan. So we don't have shared values, but we have a shared planet.
As Speaker, Pelosi managed to keep her Democrats, left, right, and center pulling together. No mean feat. In Washington, Irv Champion, Bloomberg Radio.
The findings of a Georgia special grand jury are now public. In today's release, it was learned the jurors recommended charges against 39 people in the election case, but only 19 were indicted, including former President Trump. Senator Lindsey Graham was on the list and says he did nothing wrong.
This is troubling for the country. We can't criminalize senators doing their job when they have a constitutional requirement to fulfill.
But Graham was not indicted. Neither were several other prominent people on the list, including former National Security Advisor Michael Flynn. The FAA is ordering SpaceX to make fixes after the flawed launch of its Starship system back in April, which forced the company to blow up the rocket. Bloomberg's Erica Herskowitz has more on the latest developments.
The regulator says the company needs to, among other things, redesign its hardware to prevent leaks and fires. It cited a total of 63 actions in need of remedy. SpaceX must implement all corrective actions that impact public safety. It must also apply for and receive an FAA license modification that addresses all safety, environmental, and regulatory requirements prior to the next Starship launch.
Again, Bloomberg's Erica Herskowitz. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Have a great weekend, Joe and Kaylee.
Oh, you too, Nancy. Thank you so much. Kaylee, pretty remarkable news coming out of Georgia today with this unsealed set of recommendations from the initial grand jury that names Lindsey Graham, Michael Flynn, and others as potential targets of indictment. They, of course, were not indicted. But we have to talk about Peter Navarro for a minute. He was found guilty yesterday, guilty of contempt of Congress after refusing to cooperate with the January 6th committee. Short trial, sentenced to 4 months behind bars. He's free pending appeal. But Kaylee, I'm wondering if at some point he might prefer the confines of prison so he can avoid the anarchy princess.
Please tell me more about
One of
this.
many hecklers who have been, this is like a full-time job for them, surrounding Peter Navarro when he emerges from the courthouse to heckle him as he attempts to make a point to reporters. This really came to a head yesterday when some of the hecklers were even putting signs in front of him so he couldn't be seen on camera. Here's a taste.
You know, that's not proper. You hold it there. If you want to put it, if you want to put it in front of my attorney's face, that's drawing the line. That guy could crush you, but don't put it in front of the camera, okay? That's not right.
You're in front of the camera.
I am, yeah.
Oh, just get out of here.
No, hang on. Hey, okay.
Come on, let him, come on, man. If it was you, you would want the same respect, brother.
This is another one of the
trying to defend his.
See, I love this guy. He doesn't agree with my political leanings, but he wants me to be able to speak.
Your right.
There she is.
Guy. So,
that's
yelling,
anarchy.
shut up,
Anarchy Princess.
That's Anarchy Princess, who says she's now going to sue Peter Navarro for use of her likeness without permission because she's behind him in all these shots.
And this individual is also active on X, the platform formerly known as Twitter.
This is how we found her.
Yes.
You can find her handle on your own. Anarchy Princess looming large in Washington. Thank God it's Friday.
Amen.
Let's get out of here. Actually, I'll meet you a little bit later on Balance of Power. And back here Monday, Bloomberg Business Week starts now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Well, good afternoon and happy Friday, everyone. Live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and on Bloomberg Originals. It's Friday, September 8th, 2023. I'm Tim Stenevec, along with my co-host, Bloomberg News Deputy Team Leader of U.S. Equities, Jess Menton. Carol Masser is on vacation. Jess, stocks were in the green, but now we're seeing the NASDAQ down fractionally. The S&P 500 is exactly flat right now. The Dow up just fractionally right now.
Yeah, happy Friday, Tim. Hoping to see if potentially the S&P 500, along with these other indexes, could finish the day in the green. But unfortunately, the S&P 500 on pace to snap 2 consecutive weeks of gains here. Obviously, though, when you're looking at today, though, when you think of all the news, whether it was from Apple, strong dollar, some of the economic data from whether Europe or China earlier this week, a lot of different things that investors had to deal with.
Yeah, it wasn't just economic data. It was also listening to Fed speakers. Federal Reserve Bank of New York President John Williams saying late Thursday to our own international economics and policy correspondent Michael McKee, the U.S. monetary policy is, quote, in a good place, but officials will need to parse through data to decide on how to proceed on interest rates. We're going to have more from that interview with him in just a few minutes. Also, Jess, among the most read on the Bloomberg terminal, the top 2 stories about layoffs coming on Wall Street.
And U.S. retail workers are fed up and quitting at record rates. Also, something else we're going to take a close look at. What's got a 697 horsepower, goes 0 to 60 in 3.1 seconds, and sells for $288,000. So none other than our own Matt Miller will be here to just tell us all about what he's driving, of course. Always exciting to hear from him.
Yeah, that's a fun segment that we get to do with him. And also, he has a fun job where he gets to drive around these $300,000 cars.
He's got the best job.
Also, we're speaking of great jobs, we're going to go to David Weston, who's going to be joining us in a couple hours with a preview of Wall Street Week and Huawei's surprise phone. It's not just the iPhone we're talking about today. It's Huawei's surprise phone, giving ammo to Biden doubters when it comes to China. We're going to tell you all about that in just a few minutes.
On the state, of course, on the restaurant industry with John Fraser, chef and founder of JF Restaurants. And he's got a new YouTube show, too, so we're going to dig into that later on in the show.
This is supposed to be calming. Cooking is supposed to be calming to people.
I can't wait to hear about this.
Cooking is not calming to me. Cooking is like I'm just making a mess and, things are going all over the place.
I don't have cooking gas right now. It's a long story. There was a gas leak in my but we're going to work on that. Okay. Hopefully I'll have it soon again and I can cook.
All right, that story and more to come. First up, let's bring in our TV colleagues. Bloomberg's Countdown to the Close. It starts right now.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close
Scarlett Fu and Katie Greifeld here. Romaine Bostick is off today. We are joined now by our colleagues Tim Stenovic and Jen Benton. And of course, we want to give a big welcome to our Bloomberg audiences across television, radio, YouTube, and streaming from Originals. Tim, I feel like when we were going over the markets, there isn't a whole lot to say about the market action because everything is unchanged at this point.
Yeah, I was going to say that, but you know, stocks off their highs. Still going for a down week, though, especially that NASDAQ, which is closed down more than 2%. Hey, Scarlett, we talk a lot about the experience of being a consumer when it comes to retail in this day and age. You know, walking into a store and buying toothpaste or deodorant behind something that's locked. But one thing that we haven't thought a lot about, I think, is the experience who's working at that retailer, Jess, and that you guys were talking about this on TV just a few minutes ago, is all about the experience of those employees, and there's incredibly high turnover. 95% of workers are getting fed up and they're quitting at record rates now. What's going to happen?
Right, and obviously, when we think about what happened during the pandemic and COVID, how much it affected that particular industry. So a 2022 McKinsey study found that the quit rate for retail workers is more than 70% higher than other industries. So when you see that and still the pain there, it's interesting to see like what could actually happen and what means for that industry moving ahead there, Scarlett.
Yeah, one reason I think people are so unhappy in that industry is because they're already short-staffed. They're already doing the work of 2 or 3 other people that would have been there if there was a more normal demand and supply situation across the retail space.
Yeah, it's really tough out there. And you think about the pay and the fact that a lot of these retail workers, again, I feel like the sentiment could be, I did not sign up for this. But also on the labor front, of course, we got some big headlines over the past 24 hours when it comes to the banking sector. Let's start with Goldman Sachs. News breaking that they're planning their annual cut of underperforming workers beginning later next month. The reductions, according to a person familiar with the matter, will be at the lower end of the bank's usual range of 1% to 5% of its workforce. So it seems like, again, this is pretty par for the course for Goldman. But it was interesting. We also got news out of Barclays just in the last few hours that Barclays is also preparing to cut hundreds of jobs as soon as next week due to the fact that markets have been pretty quiet.
Yeah, quiet markets being a reason for why these banks are cutting workers. That was definitely the case for Goldman Sachs, which did slash, I believe, 3,500 workers back in January. And that was in part because of the muted deal-making environment. So, and this is all coming before the bonus conversations that banks tend to have at the end of the year before they pay it out at the start of the year.
And obviously we know the pressure that David Solomon has been under. And even a month from now, obviously we know about CPI coming next week and then the Fed decision. But in a month, that's when we're starting to get results from those big banks. So not too far away, even though we always think that
You're saying earnings season is starting up again?
It's always
Oh my
earnings
God.
season.
Time is a flat circle.
So if you go to the Bloomberg terminal and you type in READ, read, you see the most read stories in the last 8 hours, 24 hours.
We're all doing
you can
it right now. What are you
Okay.
going to say?
Whenever we have a story about layoffs at a bank, Scarlett,
Yeah.
they always shoot to the top. We're speaking with Allison Williams in just a few minutes about the Goldman story. And in the meantime, after we booked her, the Barclays story came out, and it bumped the Goldman story from the top story on the most read. I mean, this is what people want to know about.
Says a lot
this
about
is-
sentiment.
Absolutely.
does.
People are nervous, even though right now the economy looks okay, people are nervous about what's to come. And this is a theme that we come back to over and over again.
Hey, we're going to come back to you guys just a little bit later, but we got to
Can't
go.
wait.
What's that?
Can't wait.
Oh, thank you. We can't wait also. Don't go anywhere because Bloomberg Business Week continues on Bloomberg Radio. And of course, Bloomberg TV Beyond the Bell. We're going to be joining you guys in just a few minutes for our countdown to the close that happens just after the bells, 4 p.m. Wall Street time on Bloomberg Originals, YouTube, and of course on Bloomberg TV. We'll see you a little later.
Thank God.
For Bloomberg Originals. You know that international economics and policy correspondent Michael McKee sat down with New York Fed President John Williams at the Bloomberg Market Forum. Well, Williams told Mike that U.S. monetary policy is in a, quote, good place. Check it out.
We'll have to keep watching the data, carefully analyzing all of that, and really asking ourselves the question, is this sufficiently restrictive? Do we need to maybe raise rates again to make sure that we're keeping that steady progress in terms of getting the imbalances, shrink imbalances in the labor market and bring inflation back down?
Michael McKee, as I mentioned, is international economics and policy correspondent for Bloomberg News. He's with us right here in the Bloomberg Interactive Brokers studio. Also with us is Molly Smith. She's economics editor at Bloomberg News, although this week she's also senior U.S. Open correspondent. She's joining us
of course.
in the studio. We're going to get to the U.S. Open in just a minute, Molly. But, Mike, first I want to kick it over to you. Okay, sufficiently restrictive. Are they making steady progress?
That's what they would argue. The inflation rate is going down. Now we're kind of in the last mile where it's going to take longer to come down. The gains won't be as big on a month-over-month basis, but they feel like they've got enough restriction in place that it should work, and if it doesn't, they can add a little more. But I think right now they're looking at definitely looking at pausing for September, maybe in November. They may be done. They're feeling better about where they are. They just want to see what the latest data tell them.
So John Williams also noted that it's still open for a question whether or not they're sufficiently restricted enough yet. How much, when we do see CPI next week on Wednesday, will that really factor in during that blackout week for the Fed for that decision, obviously on the 20th?
Unless there's some kind of real surprise, it won't matter at all to the September decision, because the preponderance of data that they've gotten, and that's the way they always put it, is suggesting that the economy is in the right place and that inflation's going to come down, et cetera, et cetera. It'll be the November meeting that will get people talking. The markets, if there is something awry, will try to price something in for November, I think. I don't, at this point, I wouldn't expect Wall Street to completely change their mind and retrade everything to anticipate a Fed move.
And looking ahead to the CPI next week, I don't think the Fed is going to be particularly happy to see the overall numbers. That includes the food and gas metrics, because gasoline prices did rise so much in the month. So looking at those headline metrics on the monthly and the annual basis, not going to be a pretty picture. But we know that the Fed officials are going to look through that noise. They care about the core figures, and that should be more promising.
And you know what's really interesting? If you take a look, oil prices have been going up.
Yeah.
Gasoline prices have been going down this month.
Huh.
Energy collectively, I should have said that more
I mean,
yes.
the August numbers that Molly's talking about will show gasoline prices higher, but the weird thing is they're going down now, even though as oil prices go up.
Why is that happening?
We had a lot of refinery outages during the month of August that
because of storms,
crimped supply. Well, maintenance and some other problems crimped supply, and there were also some profit taking, I think, in there. But the biggest thing is most of those have come back online. There's a big refinery outage in the Midwest, so you're seeing gasoline prices in Iowa, Minnesota, they're rising a little bit. But nationally, the AAA number is going down.
So go ahead, Jess.
Well, I was curious too, whenever we're thinking about John Williams and him talking about how the unemployment rate will potentially rise to 4%. I mean, it's getting a little bit closer to that, but also the last report, more people were out coming back into the labor force, so that did affect the unemployment rate. What do you think would really need to happen in order to see that kind of move there in the unemployment rate?
Well, you have to have fewer people getting jobs and more people in the labor force who aren't getting jobs. And the question is that going to happen? Are companies hoarding labor, which is what seems to have happened? Now, we may get another dump of people into the labor force, but that was an unusually large one, so it probably isn't going to be repeated. But for Williams and Company, they're looking at something, nerd alert, called the beverage curve. And there is a big...
I haven't even heard of that.
I like that. Tell us more about that, please.
Well, it's Friday afternoon, so the beverage curve could mean a lot to a lot of people listening out there.
I want to know.
But there's a debate within the Fed about where it's the relationship between job openings and unemployment. And where that is at the moment, there's a debate within the Fed. Chris Waller doesn't think, the Fed governor doesn't think that they need to see a big rise in unemployment, that they can bring inflation down without it. So we'll see.
One more over to you, Mike, and then I'm going to focus on Molly and tennis and maybe some economic stuff too. Fed officials, and I know where Molly stands because she's been talking about a soft landing for months at this point. Do you notice a tone shifting with Fed officials and the way they talk about a soft landing?
They're more willing to talk about it. Now, nobody's going to come out and say that this is going to happen because they don't want to be wrong. They remember transitory. But they definitely feel like at this point it's unlikely, barring some external event. And we will get a new summary of economic projections, their economic forecasts at this next meeting on September 20th. And it's likely to show they're not pricing in any contraction at all.
Okay. Where are we in the landing right now? Like, if we're cruising at 30,000 feet, the economy's cruising at 30,000 feet, we're going to land at sea level. Where are we?
I wish I had a metaphorical answer for you there. We're somewhere closer to the ground.
Okay. Well, all I'm saying is we've been talking about a soft landing for almost as long as I've worked here.
I go back to George Aiken, the senator from Vermont during the Vietnam War, who said, let's just declare victory and go home.
Well, speaking of declaring victory, Coco Gauff declaring victory last night. Molly,
not going home.
Not going home.
Not indeed.
Madison Keys, though, when I went to bed, Molly, Madison Keys had just won the first set against Sabalenka.
6-love.
6-love. And I was like, okay, I'm going to wake up and tomorrow morning it's going to be an All-American Women's U.S. Open final. What the heck happened?
Oh, it's killer. I mean, I've never seen Maddie play so well in my life, probably in hers either. And yeah, she had a 6-love, 5-3 lead. And it was devastating to see that like she couldn't pull it across the finish line. But I think that's also to keep in mind. She was playing against Sabalenka, who's now the world's new #1. These are people who know how to come back. And I don't think it's fair when I'm seeing across the internet that like Maddie just choked beyond belief. Like these are incredibly high pressure situations, but also she's done it before. She has made a US Open final, so she does know what this feeling is like. But Sabalenka started playing better when she was down 6-love, 5-3, and she carried that through to the end.
Do you think Coco can pull it off on Saturday?
I really hope so. I would love to see her win. I think, that she's had an incredible summer. This has been some huge titles for her since she brought Brad Gilbert into her camp as having the best season of her life, and she's ready now. She made a final already of a Grand Slam, and she's spoken to how, maybe that helped her in hindsight to not win it then, and that her expectations now are different and she feels more mature and ready.
What about this brutal heat?
Yeah, it's been so humid out there, and a lot of the players, thankfully no one has had to, at least as far as I know, retire a match because of it, but it's stifling in New York right now. I think it's actually about to thunderstorm outside if it's not already. I'm not a meteorology reporter, so but
all you need to know is I'm going to be going home soon, and the minute I walk out the door, it'll start.
I always forget my umbrella on these days.
Yeah.
Are you going to the Open at all, Mike? Did you go this year?
I didn't get invited. So no, I'm not going. And I'm looking at all three.
I didn't either.
You can be my guest.
Don't say that.
I didn't get an invite either. It's okay.
No, you got your own ticket. Hey, speaking of the weather, though, the U.S. Open, USTA just emailing a press release saying that they closed the stadium even
Close
before.
the roof, you mean?
Yeah, close the roof, yeah.
Oh, yeah. No, I assume it's going to be closed. I think Djokovic and Shelton are the first match on. I think they're supposed to start at 3.
It started.
So
Djokovic has won the first point.
Look at that.
Yeah.
All right. He's off to a great start.
He
might have a couple hours ahead of him,
This
but we'll
just
see.
into the Eyewitness Newsroom.
Is he going to show Shelton who's boss?
I think it stands to reason that he has he's a very solid favorite. I would have a hard time seeing Ben Shelton, even though it's been an incredible 2 weeks for him, beating Djokovic in best of 5. Best of 3, maybe better luck, but this would be tough.
Okay, and then tonight's match, Alcaraz versus Medvedev.
Yeah, he's got a pretty favorable head-to-head in that one as well, so I don't see
Alcaraz does.
Yes,
Yeah.
I don't see Alcaraz really having a whole lot of trouble with that. He'll be a heck of a lot fresher than Medvedev as well coming into this. So, he hasn't really stumbled at all so far. He's maybe dropped a set or two on the way to here, so he's looking pretty good.
What do you think?
I'm sorry, I pay more attention to college football, so it's like I'm
Well,
more
you're from
like
Texas, so-
Texas A&M and Miami tomorrow. So it's like I don't watch the tennis as
Somebody sent me a chat this morning and asked if I like sports because they're starting a chat here, Bloomberg Sports Chat, and I was like, I only pay attention to cycling and tennis, so I don't know if I would should be included in this chat.
We have a tennis chat, Tim. You should be in it.
Yeah, I'll join the tennis chat.
I'll get you in it.
A big thank you to both of you for joining us, and also thanks to all of you for just humoring me and letting me talk tennis for a few minutes. Michael McKee, he's international economics and policy correspondent for Bloomberg News. Also, of course, Molly Smith, economics editor for Bloomberg News. Both with us in the Bloomberg Interactive Broker studio here in New York. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with an economic note. Consumer borrowing up in July, reflecting a rebound in credit card balances. Total credit increased $10.4 billion, according to latest data from the Federal Reserve. The gain, which is not adjusted for inflation, was less than the $16 billion median forecast in a Bloomberg survey of economists. Stocks have turned lower since our last update. Right now, we're looking at a 2-point loss in the S&P 500 index at 44.48. We are on track for a losing week. Right now, we have got the Dow Jones Industrial Average holding on to a gain of 2 points. NASDAQ in the red now, down 13 points, a drop there of 0.1%. 10-year yield 4.25%, with a 2-year that's yielding 4.98%. As for the market backdrop and the outlook for the Fed and interest rates, Christina Hooper is Chief Global Market Strategist at Invesco.
Well, I think it's all about what the Fed is going to do. And I actually do believe the Fed will sit on its hands. I do think we're not going to see any more rate hikes. But the reality is the market doesn't believe that.
And right now we've got the 10-year yielding 4.25%, with the 2-year at 4.98%. Spot gold flat on the day right now at $19.18 the ounce. West Texas Intermediate crude up 0.6%, $87.38 a barrel. A source tells Bloomberg Goldman Sachs Group is planning its annual cut of underperforming workers beginning later next month. And Barclays is said to be preparing to cut hundreds of jobs as soon as next week, as the firm looks to trim costs amid quieter markets. Recapping, stocks lower with the S&P down by 0.5 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Bloomberg Business Week is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. Well, Jess, among the most read stories on the Bloomberg terminal today, Goldman Sachs planning its annual cut of underperforming workers. That's set to begin later next month. That's a person familiar with the matter telling Bloomberg News. And Barclays is said to be preparing to cut hundreds of jobs as soon as next week as the firm looks to trim costs amid quieter markets. We just heard those headlines from Charlie Pellet moments ago. To help us make sense of all of this and to give us an idea of, is this just business as usual on Wall Street? We're very pleased to have back with us Allison Williams, Senior Global Banks Analyst at Bloomberg Intelligence. She joins us on the phone from New Jersey. So, Allison, that's my main question here. Is this just a return to normalcy for when it comes to sort of these annual calls of these big banks?
Well, certainly the Goldman story very much would indicate the return to normalcy, although it is notable that is perhaps the third round of cuts that they'll be seeing this year, so that's a little bit abnormal. I think that, and the Barclays news, they had sort of a tough quarter, a big revenue miss, so they're feeling it, both on the trading side but also on the net interest margin side, whereas some of the U.S. banks have sort of gotten a lift in that business as some of the deposit cost fears are receding. But for the capital markets units, I think September is really going to be the key month. Kind of coming into this year, we had great stock performance in the tech sector, but the IPOs really did not come. And I think because it was good performance, but not good enough in terms of looking at some of the prior valuations and where those companies might want to come public. So that's been disappointing. Some of the highlights have been more in the high yield side of things, but again, growing off very low base. July was a good month. August slowed down. And so really September is a month that makes the third quarter, and I think, based on what we see, could be indicative of some of the cuts to come as we typically see at year end.
And Allison, as you know, the bank has been having a list of different headaches, whether you're thinking about the pressure, obviously CEO David Solomon's under. Goldman also made material markdowns to its real estate book and warned of a hefty write-down from the sale of its consumer banking unit. And then it also lost its ranking as the top M&A deal maker earlier this year. We do have about a month out before we start to get earnings from some of these major banks. Obviously, we still have a few weeks before then. What are you sort of viewing as far as when it comes to shareholders, what they're really looking for the bank to do here?
Yeah, so for Goldman, it's, there's sort of the structural strategy, and then there's the cyclical story. So the cyclical, we kind of talked a little bit about some of the trends going on. The bigger shift at Goldman, obviously, over the last, or bigger shift, I guess, in terms of talk, if you will, over the last several years was, reaching out to sort of expand its core base to the mass market with some newer products, some acquisitions, et cetera. And I think what we've seen is sort of a retrenchment of that in the last couple of years. Now, some of those deals were under Solomon, but some were under Blankfein. Certainly, the consumer strategy was something that was started under the prior management. But I think the fact that the bank is sort of, getting closer to home in terms of focusing on that core institutional client again, they found that they can market products without necessarily owning that distribution. So that's sort of the move they're making with United Capital in terms of selling that out, but keeping a partnership in the credit card business, keeping partnerships, but again, not necessarily wanting to do the sort of balance transfer loans they were doing in the past. On the M&A front, the one interesting thing I will always point out about Goldman is, there's shifts back and forth in terms of number one. I mean, they're generally number one, and then, Morgan Stanley, JP Morgan, number two. But, at the end of the day, the revenue for them they still do earn dollar for dollar more revenue than the next peer, and that's really just to, relates to their leading roles. But that is a business that we expect is going to see the most pressure just because it held up really well last year. We're seeing that, so we've already seen sort of the deals die off. The revenue has a lag there, so that's going to be weak in the second half.
And David Solomon has faced plenty of heat in his role leading Goldman Sachs, particularly this year. How much of it recently, and especially in the last few weeks, is really new here, or is it the same type of criticisms that we have been hearing over recent months?
So, certainly there has been a lot of media attention on David Solomon, which I think has been pretty tough over the last several quarters. I think it's been more of a focus in the media than necessarily investors for the most part. But I would say that, the last quarter was pretty tough. There was a lot of marks, again, to the extent that it's, a turning point where you're kind of kitchen sinking a lot of marks, taking a lot of the pains, and then going to kind of improve from there. I think that's what's going to be more important for investors. It's really the cost side of things for investors that they're focusing on, because that's a target that Solomon set. And to his credit, he set targets. Most predecessors have not, but they're not making that target. The revenue environment they cannot control, but they can control costs. And I think that's where the investor focus is.
Is there any talk? Well, I shouldn't say is there any talk, but as an analyst who covers the space and covers the bank, do you think his job is at risk?
So again, I think that has been more of a media story than an investor story.
Why is that, do you think?
But I think from an investor's, because I think that, let's go back to like the consumer business, right? So that has gotten tremendous media attention over the last couple of years because it was a very un-Goldman-like strategy to pursue, and it didn't work. And now they're pushing that aside. But again, it's under Solomon that they're stopping that business, but it was under the prior management where they sort of had sown the seeds. And by the way, transaction banking was another new thing for them, and that business has done phenomenal. We don't really hear as much about that, and perhaps because it's more aligned to their core businesses. But the consumer business, as I said, that's gotten a lot of attention. It's sort of unlike Goldman to try something so out of the box, and the fact that it was not successful, I think, has gotten the attention. But again, I would say from an earnings standpoint, it was tiny. It's never something, I think, investors really never bought the stock because of that. I think a lot of investors were always doubtful for it, so I think it was perhaps less surprising for them. And of all their businesses, it's something I think that the broader population understands the most and it's a much more visible retrenchment, if you will.
We only have about 30 seconds left, but wanted to quickly ask you, Barclays cutting hundreds of jobs across its trading and investment bank units here. What's your take on this?
So I think that, that they had a tough quarter, for all the investment banks, especially on the banking side. They sort of held on to a lot of headcount with the hopes that things would get better. And, fees are setting at lower levels, so even below pre-pandemic levels. So I think that's tough. That's what we're seeing on the banking side. And then on the trading side, again, the equities business and especially the derivatives business, there is no volatility, believe it or not. And I think that's really weighing on that business.
Hey, Allison, we really appreciate you taking the time on this Friday afternoon and joining us on Bloomberg Business Week. That's Allison Williams, Senior Global Banks Analyst at Bloomberg Intelligence. She's joining us on the phone from New Jersey. Well, let's go to Washington, D.C. now. We go and we find Nancy Lyons. She's in the Bloomberg 99.1 newsroom there for checking the latest world and national news. Hey, Nance.
Thanks, Tim. President Biden is now in India for this weekend's G20 summit. While Ukraine will be one topic of concern, Bloomberg's Anne-Marie Hordern says without China and Russia there, the U.S. will also be appealing to other nations to stick with the U.S.
A lot of this is going to be about what the West can do for the global South, what they can do in terms of development funding. The U.S. is really going to want to talk about funding for the World Bank. And for them, they're really trying to outline, you can still stay with us, we will support you, and this is an alternative path to Beijing's Belt and Road.
Again, Bloomberg's Anne-Marie Hordern. One topic expected to come up at the summit is the climate. And as Bloomberg's Nathan Hager reports, there's a new landmark report on global efforts to cut greenhouse gases that shows many countries are falling short.
The report from the United Nations Climate Change Secretariat calculates the progress every country in the world is making on their pledges to reduce emissions. It says they all need to work quickly to cut billions of tons of carbon dioxide to keep the world from warming by 1.5 degrees Celsius by the end of this decade. This summer was already the hottest on record. Today's UN report is meant to underpin global climate talks that'll be held at the COP28 summit in Dubai this November. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Biden administration has declared a power emergency in Texas amid soaring electricity demand sparked by a brutal heat wave. The order issued by the Energy Department expires tonight, but allows the state's grid operator to waive some air pollution limits. The IRS says it is shifting its audit focus to high-income earners, partnerships, and large corporations, and it plans to use artificial intelligence to spot patterns. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P up barely, swinging between gains and losses. 20 minutes to go ahead of the closing bell. NASDAQ in the red after earlier gains. Right now, the NASDAQ Composite Index lower, little change as we head into the weekend, down 6 points now, drop there of less than 0.1%. Again, the S&P flat right now on the day. The Dow holding on to a 37-point gain, up by just about 0.1%. Energy and banks are among the best performers today. We've got the 10-year yielding 4.25% with a 2-year at 4.98%. Spot gold lower, little changed as well, down 61 cents the ounce now to $19.19. And West Texas Intermediate crude up 0.6%, 87.40 for a barrel of WTI. Brent, the global benchmark, holding above $90 a barrel, 90.57 right now for a barrel of Brent, up by about 0.7%. Briefly, Elon Musk's X Corp is suing California over its legislation requiring social media companies to explain how their content is moderated. Recapping, stocks are trading mixed ahead of the close here. 19 minutes to go right now. S&P up by 1 point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Mitten and Tim Stenovic here. I'm in for Carol Masser today, who does have the day off. And Tim, with just under 20 minutes to go before the closing bell, U.S. stocks are struggling to stay higher, putting the S&P 500 on path to snap 2 consecutive weeks of gains. Stocks, as you know, did come under renewed pressure this week after reports did signal that growth is cooling in both Europe and China. Obviously, we did get a number of Fed speakers ahead of the blackout week next week, and of course, CPI next Wednesday. Those stocks are somewhat supported today after a rout in Apple shares did cool somewhat. And of course, I have to bring up with the Bloomberg Dollar Spot Index. It eased a little bit, which helped kind of prevent more losses today. But when you're looking at that index, it did climb for 8 straight weeks. So that has correlated with pressure in the broader equity market over the last month or so. So who better to break down the latest in the markets than Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth, joining us on Zoom from Nyack, New York. Marianne, it's always a pleasure speaking with you. The last time I talked to you back in July, I know sort of your view as far as how you were positioning a little bit more bullish when it came to particular corners in tech and growth, whether it was software and kind of cloud companies. But after this week and what we saw from Apple, what's your view heading into next week, obviously ahead of that CPI report?
Yeah, correct. We've been bullish and we generally stay bullish. But as we went later into the month of July, markets really got very overbought. And we knew we were moving into the seasonal period where markets get weak. And, many people have been talking about that. September's generally not a great month, and October can be a little bit rocky. And, with the S&P up 15%, NASDAQ up 30%, we thought you could have a seasonal correction. And we think you're in that seasonal correction. And you mentioned Apple. Of course, it's an important name. It's, the largest company in the market. It's the largest company in the S&P 500. But we don't see anything long-term broken there. We just think that the market, and especially tech, because it's up so much, is just in this period of consolidation. And what we've been telling our clients is that anybody that's missed this rally, we think this correction is bringing an opportunity to actually buy equities.
How much more of a correction do you think we actually have on the S&P 500?
So we've been saying 5 to 10%. We've already had 5%, and we don't have oversold readings. So you risk from the peak in the market, which is around the end of July, around the 27th. So from that peak, we think you can go down to about 10%. But there's a lot of support around 4,200. For the NASDAQ, it's going to be deeper because they were up 30%. So we think that's 10 to 16%. But what keeps us bullish is earning estimate revision ratios continue to rise. And seasonally, they tend to go down this time of year, yet they're going up. And then when you look at what analysts are looking for in terms of earnings going into next year, they've raised their numbers to the point where they're looking for earnings to go up around 11 or 12%. And that's pretty significant. Companies have really become efficient in managing, their bottom line. Margins were really good in the second quarter. So that's what's keeping us optimistic that we want to buy on this pullback.
You brought up earnings estimate revisions turning higher. How much do you think, when you're looking at some of the weakness in energy, obviously correlated as inflation has continued to come down, is maybe masking some of the strength in other industries?
I don't necessarily think that's the case. I think we always try to find excuses when a particular sector is actually driving everything. I do like energy. Energy has been one of our favorite long-term investments. And obviously, we've had the breakout in crude oil, and that looks a little bit sustainable. So I think that's going to continue to push energy higher. And again, that's a sector that really has great value. The companies have great cash flow, and many of them have great dividends. So, I think that there's a potential for energy and crude oil to continue to go higher. But I think that this, is moving as the market goes down. So you're kind of getting a rotation within the market, but I don't think it's a distraction.
So let's say energy and crude oil do go higher. That has negative effects for trying to bring inflation down. The Fed wouldn't necessarily like that. What does that cycle look like to you? Does that scare you at all?
Well, no, it doesn't scare me, but you do bring up a good point. If energy stays elevated, at some point on a rate of change basis, that's going to get into the numbers. Right now, when we look at CPI or core PCE, it does look like inflation has peaked. But, we also have, UPS negotiating for higher wages. You have the UAW trying to get wages. They might go on strike. And, we've had the writers and the actors on strike. And, if we start seeing wages go up, that later on can impact inflation gauges. But in the near term, I think inflation gauges can be positive for the market. But as Powell said, coming out of Jackson Hole, they're still data dependent. If they do see data that concerns them about inflation, I don't think that they're going to hesitate to raise rates. But at least for this month, I think they're going to stay on hold.
So, Marianne, how are you advising clients to position? What are you buying? What are you selling?
So, I do think technology remains the leadership. Our favorite pocket has been semiconductors for quite some time. We also like software and services. We also like the industrial space. Biden's number of legislation, including like the Infrastructure Act, the CHIPS Act, and the Inflation Protection Act, is going to actually start hitting our economy next year. And we think one of the sectors that best benefits from this spending in fiscal from the fiscal legislation is going to be the industrials. As I mentioned, I also think energy longer term is very attractive. So we're really staying with growth, and we're staying with large cap, because the pocket of the market that we're really still concerned about are the financials, particularly the banks. And with the regional banks really trading very poorly, we think that that's really going to cap value. So we think it stays growth. And it stays growth because when you really look at earnings, when you have an earnings cycle where earnings are scarce, and earnings are still considered scarce. We just had really a corporate profits recession. We're just coming maybe off that corporate profits recession. So with scarce earnings, growth actually outperforms. Value needs an abundance of earnings, and we're clearly not there yet.
Marianne Bartels, love it when you join us. Thank you so much for taking the time and joining us this afternoon on a Bloomberg Business Week. Marianne is Chief Investment Strategist at Sanctuary Wealth. She joined us this afternoon on Zoom from Nyack, New York. Just a few minutes away, about 10 minutes away from the close of U.S. equity trading. The Dow up 0.1%. The S&P 500 right now higher just fractionally. The NASDAQ down just about 4 points, less than 0.5 of 1, or less than, I should say, of 0.05 of 1%.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stellantis, the automaker's facing pushback on its latest offer to unionize employees after a top United Auto Workers leader said the carmaker's wage increase wasn't adequate. This is less than a week ahead of a strike deadline. Stellantis shares up by about 0.8%. Apple will be unveiling its newest iPhone next week, September 12th, and it comes amid the backdrop of mounting risks in China, including a ban on the use of iPhones in sensitive government departments in China. Pierre Ferragu is head of technology infrastructure at New Street Research, and he told us he's now got a neutral rating on Apple shares.
This ban is not going to affect Apple in the near term. Of course, it's a wake-up call for investors. They're like, oh my God, like this situation with China is not getting well. And I think the ban is one thing, the Huawei phone is another one, and it's not a coincidence that we see the two things popping up in the same week.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Apple shares are advancing today. Apple shares ahead of the close up by just about 0.2%. Kroger and Albertsons have agreed to sell 413 stores to CNS wholesale grocers in a divestiture that is designed to win antitrust approval for their $24.6 billion merger. Shares of both companies are moving higher. Those are our top company stories at this hour. I'm Charlie Pelletier. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenivek and Jess Menton, Deputy Team Leader for U.S. Equities here at Bloomberg News. Filling in for Carol this week. Jess, thanks for filling in for her.
It's always a pleasure being here. It's always a blast. So I always feel honored when y'all ask me to come by.
Oh, we love hanging out with you. Hey, a couple stories I want to get to before we get over to our TV team for our Beyond the Bell coverage. We got the new iPhone coming out next week. I mean, Apple hasn't said that, but we all know this happens. 15 years.
Tuesday. Everybody
Yes.
can't wait.
Everybody.
iPhone 15. What's going to happen with the watches?
I've lost track of how many iPhones there are. But I guess, yes, it is the 15th.
Right. I feel like anytime this happens, it makes me think, okay, is this my time? Do I need to upgrade again?
It doesn't hit the same way it used to. That's what I will say.
Because there's been so many every year.
And also because they just, like, you know, my iPhone from a couple of years ago is just as good. As,
right. I don't change it every year. I
pictures,
usually try to
fast.
leave it as long. I had the 6 forever, and then eventually I was forced into
that's
changing
so
another one by
old.
my. But this was a few years
Okay.
back. But I had it for probably 4 or 5 years, and then my cell phone company, I won't say who they are, but they're like, hey, you gotta.
Wow.
You gotta change
Forced
it.
by the
Or
cell phone
They're like,
company
we're
to
shutting it
upgrade.
down unless you. But
All
it
right.
worked.
So what do you have now?
I think I have the 13.
13.
So
Okay,
it's
that's
2
still a
years
pretty
ago.
new one.
So
Yeah.
it's close to 2 years.
I think I
old,
got that
yeah.
one or the 12. I
The
don't know.
battery, though.
It's
Running
killing.
out
It's
of
killing you.
steam, yeah.
Oh yeah, I need to charge my phone. Thanks for the reminder. Hey, the reason we're talking about these iPhones is not because of Apple's event that's happening on Tuesday, but it's about an iPhone being hacked using Pegasus' spyware software. That's from Israel's NSO group. An iPhone belonging to a staffer at a Washington-based civil society organization was hacked remotely with spyware created by Israel's NSO group. This hack, Jess, it was discovered last week. It was reported to Apple, who moved to quickly investigate and patch the breach. That's according to John Scott Relton, a senior researcher with the Citizen Lab at the University of Toronto's Monk School.
Yeah, the NSO group has been sanctioned by the U.S. since 2021 due to its Pegasus hacking tool, which has been used by some governments to target journalists and dissidents beyond their borders. So it's called a so-called zero-click hack there, in which the user doesn't need to click on a link in order for the malware to install the software.
Yeah, this is scary stuff. And I mean, the reason we're talking about this with Apple is because, you know, these are supposed to be the most secure products that are out
Right.
there. I don't want to say unhackable because we know that's not the case. But Apple has that whole privacy campaign. What happens on your iPhone stays on your iPhone. So
Exactly.
Hey, don't go anywhere. We're joining our Beyond the Bell crew in just a few minutes. Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Scarlett Fu counting it down to the closing bell. And here to help take us beyond the bell, we have a global simulcast joined now by Tim Stenivek and Jess Menton. And we bring together all of our Bloomberg audiences, television, radio, YouTube originals to talk about some of the crucial moments of this trading day. And Tim, I got to say, it was a little bit boring.
Yeah, I was going to say, tell me about the crucial moments, Katie.
I was hoping you would.
No, you know, I'm going to go back to something that Marianne Bartels just told us. We were speaking to her just a few minutes ago. She's chief investment strategist at Sanctuary Wealth, and she reminded us, you know, we're in this time of the year that things are a little quiet, although it's the end of the summer and, you know, fall has started. Apple's doing its
The
thing
solstice
next
hasn't
week.
happened yet. Just
The what hasn't happened yet?
The solstice. It's
Oh,
still
yeah,
summer.
you're right.
Yeah,
you're right.
please.
And it was 90 degrees yesterday, so.
Yeah.
I know.
It's brutal out there.
She
Sorry
does
to
think
shout
we're
you
still in
down.
this seasonal correction, though. And, you know, we're a couple percentage points down on the S&P 500 from the highs of July. But she thinks there could be further downside to go, though the end of the year, she's still calling for a double-digit increase on the S&P 500.
Yeah, I mean, SCAG go, we always like to talk about that to look at seasonality in the terminals. So we do know when you look back in history, September typically is the weakest. It was particularly when it comes to the S&P 500, but still questions, right? We still have CPI next week, obviously the Fed decision on the 20th. So it'll be interesting to see how particular funds are squaring things away once they get closer to the end of the third quarter.
I feel like a lot of the excitement of this week happened early on in the week, on Tuesday, with the corporate bond issuances, for instance, stealing so many headlines. And then it just kind of petered out, Katie, over the last few days, especially what Matt Rowe was telling us of Invesco.
Yeah, and we'll see whether that was just the post-summer rush. But you take a look at this equity market right now, 5 seconds to go. The S&P 500 actually managed to claw itself back into the green. We had dipped into the red. Going to finish this Friday almost 0.2% higher, though. It is a down week for the big benchmark. The NASDAQ composite, it's up about 0.1% as well. The Dow Jones, your relative outperformer, but just barely going to finish up about 0.2%, Tim.
Yeah, looking at the last 5 days, even though it was a shortened trading week, we're seeing the NASDAQ down 1.9% over the last 5 days. The S&P 500 down more than 1%. That's 1.1%. The Dow Scarlet down 0.4%.
All right, so let's dig beneath the big, broad numbers and look at how the industry groups have performed. On the day, energy higher by 1%. That's as oil prices stay elevated. They did stumble a little bit in the middle of this week, but very much the story here is on production cuts from Russia and Saudi Arabia. And in fact, energy stocks are the best performers of this holiday shortened week as well. Software and services, your third best performers, up 0.8%. They are the second best performers of the week. And then you have utilities, so a little bit of defensive positioning here, at least to end this week. On the downside, you've got telecom services, autos and parts, and of course we're waiting for some kind of development there on the negotiations between the UAW and GM and Ford, and chip makers, all closing down by at least 0.75%.
Okay, well, let's go into some of the gainers, some of the stocks that were in the green today. I want to start with Apple because it's just been a brutal week for the company. Shares closed down about 6% so far this week. Shares moving higher, up 0.3% on the day today. I mentioned Marianne Bartels once again because we did talk to her about Apple. She said that she doesn't see anything long-term broken here. She just thinks the market and tech is in a period of consolidation. But people who've missed this rally when it comes to the broader markets and when it comes to tech have been taking a bite lately. Also taking a look at other companies that moved higher today. Kroger shares finishing higher by just about 3% on the day today. It's rising the most since March. This after it agreed to sell more than 400 stores to CNS Wholesale Grocers. It's a divestiture. It's designed to help win antitrust approval for its $24.6 billion merger with Albertsons. And then how about a little executive shuffle to get a stock moving? CSX shares finishing up by 1.6% today. This after it named Mike Corey, a former executive from Canadian National Railway, as the freight transportation company's first COO. Bank of America actually coming out after the news saying that raising its rating to buy, calling Corey a, quote, guru of precision scheduled railroading, a strategy that is, of course, aimed at improving operations. Jess.
And I'm going to take the losers or the decliners, however you want to call these for this. So RH, formerly known as Restoration Hardware, if you look at that stock down almost 16%. So this is basically its worst day since March of 2020. But its shares did decline after the midpoint of its third quarter revenue forecast did miss estimates. Another one I wanted to point out is Hudson Pacific Properties. That's ticker symbol HPP. That's down almost 3%. So looking at that stock under pressure and did falling after suspending its quarterly dividend amid the writers and the actors strike. So when you're looking at that, obviously it's a pain point because it is a major landlord in Hollywood in particular. And then DocuSign, we did hear earnings results from them after the bell yesterday. Obviously the e-signature company that is popular among a lot of people, including myself. But if you are looking at those shares down, actually close to 4%, so its worst day since July 20th. So even though it posted second quarter results that did beat expectations, not good enough to keep that stock higher and pulling back from those gains earlier in the session.
All right, let's get on over to the bond market. An interesting day today, although quiet, just like the equity market. Let's start here with 2-year yields actually rising a little bit of a sell-off there. Still below that 5% level. You can see the 10-year yield. I'm going to call that unchanged. The 20-year yield, I'm going to call that unchanged too. And the 30-year yield, it did fall a little bit by about 1 basis point. And we think about August and the month that we had. It was so dramatic in the bond market. And now we have 2 big weeks ahead of us, Tim. We have CPI next week, and then finally we get that Fed meeting. And I know it's expected to be a snoozer, but when you think about what we're going to get an updated projection from the Fed about where the economy is going to go. And we're going to hear some signaling, hopefully, from Jerome Powell himself about what does higher for longer mean for this Fed?
Well, we have a week and a half before the Fed actually speaks, before Jerome Powell speaks. So that's a lot of time for everyone to speculate and kind of play out their worst fears. You know, given that we saw earnings from GameStop this week, I was excited about the possibility that maybe dumb money would be coming out this weekend. But it turns out, no, it's next weekend.
What were they thinking with the timing there?
I know. They should have synced it up with the earnings release, right? I mean, who doesn't want to see Seth Rogen as Gabe Plotkin?
I will tell you.
Does the broader populace track earnings releases as closely as we do?
I mean, in my world, Katie, that would make sense. In your world, that would make sense.
Yeah.
I will say, in my universe, this movie is getting a lot of traction. My dad sent me a text earlier with a New York Times review of it, and it was like, "This actually looks pretty good." He's going to go see it.
That's cute.
Alex Steele has a small cameo in it. I saw
No
her.
way.
Yeah,
Oh, yeah,
in the
I
trailer.
love that.
Yeah.
Oh, now we all got to go see it.
We should all go
Let's do a little
That's
party.
pretty cool. That's pretty cool.
I'm excited.
I don't know. Is it going to surpass Barbie? It has a pretty high bar to meet when you think about some of the
No
releases
way.
that we've gotten.
There's no way.
I don't think so.
Let's hope it gets to like the Big Short level or Wall Street. You know, I like our industry getting some love.
Yeah.
Finally.
I mean, when Mike McKee was talking to John Williams for the New York Fed yesterday, he actually asked him about the sort of Swiftonomics and the Taylor Swift effect on the economy, and he was saying, "Hey, that is a real thing here," and apparently, you know, he's keeping a close eye on. Obviously, not a big part of.
You can count on Jess to actually bring it back to something that we're supposed to be talking about.
Swift, Barbenheimer, you know, fun things here.
It all kind of gets back to the same thing. And I mean, Taylor Swift is coming out with a tour movie, which will be pretty fun to watch. I'm just determined to peel us off from actually an economic discussion here.
I didn't get to. I've talked about this on air, so people are probably bored of this, but I didn't get to see her in concert over the last few months.
I actually haven't heard you talk about this, Tim.
Well, that's because you're on TV when I'm on the radio.
Yeah.
So you're not.
You
Hopefully,
don't have
not
a teenage
listening to
daughter,
it.
though, Tim. I feel like that's the requirement.
I know, but my wife and I would have really wanted to go to this to see her in concert.
What happened? Did you get
Go see the movie.
outbid? Could you not?
No,
was
we
there
had
scarcity?
a kid. We had a kid.
Oh,
so
right.
yeah,
Yeah.
That's a good
we
reason
We
not
don't
to.
leave the house.
You didn't bring the infant to the concert?
No, we didn't.
You have to get the special headphones.
I do want to bring something back to like a serious conversation a little bit, the rise in oil prices that we saw this week, and wondering what that means for CPI, Jess, and wondering also what it means for the Fed's fight against inflation, because they have no control over what oil prices do. We talked a lot about this last year, but the higher prices kind of rearing their ugly head again.
That's why they strip out food and energy prices.
But what's great is, as Carol says, Carol's not here, so I have to represent her. Fortunately, nobody pays for food or energy. That's what she says.
So you're going to bring up Chinese companies?
No.
No.
They also like to strip out housing too. When you're looking at some of the super core there.
Then there's nothing left. Then there's nothing left.
Forget food, forget energy,
Can
forget
I say,
housing.
though, it's interesting if you think about the different things that they do watch, because we know that the Fed cares very deeply about inflation expectations, and you think about how inflation actually touches consumers in the economy. It's through food, it's through energy. So if oil prices, if gas prices are rising, theoretically that feeds into inflation expectations, and the Fed still has to care about them.
The Bloomberg economics team saying don't get concerned if we do see something higher there, that the Fed is going to hike again this year. They think they're done for the year. All right, we'll see. Hey, everybody, have a good weekend, okay? Please.
You too.
Maybe try to get a sneak preview of that new movie coming out. Really appreciate you guys joining us this afternoon and letting us hang out with you, of course. That is going to do it for Beyond the Bell. It's our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals, and of course on YouTube. Catch us same time, same place on Monday. Just fed up, and they're quitting right now at record rates. Low pay, erratic schedules, monotonous tasks have long been a challenge for the nearly 8 million Americans who work in retail, but the pandemic years have added a host of taxing new duties. Employees must cope with an uptick in shoplifting and customer orneriness. They manage online orders, they run up and down the aisle to unlock items. like toothpaste and deodorant. Devin Leonard is senior global business writer for Bloomberg Businessweek. He joins us in the Bloomberg Interactive Brokers studio. Devin and Diana Bravo writing today's Big Take. Read Devin's story and more from Bloomberg The Big Take. It's on the Bloomberg terminal and, of course, at bloomberg.com/Big Take. Devin, good to have you with us. You know, it's interesting. We talk a lot about the experience of being a consumer in these stores. What we haven't talked about a lot until I read your story was how hard this has been on the retail workers.
Yeah, I mean, this whole story came out of, it was an idea of Rebecca Greenfield's, one of the editors on the global business team, and I guess she'd been reading about, you know, for instance, at Target, you know, Target had withdrawn some, you know, LGBT, you know, Q-themed items, you know, from its, you know, shelves after employees were, you know, threatened. By customers who are upset about that, you know, on the sort of eve of Pride Week. And I guess she was saying, you know, geez, you know, what's happened to, you know, retail work these days? So, you know, we tried to go out and talk to a lot of people.
On that note, I will say I saw some of those videos that were posted, and kudos to those retail workers for just like, I wouldn't say they like held their ground or standed firm. They were just like relaxed in this situation. That always struck me as like, you know, you're giving this person such a hard time, and they were just like, they were actually so professional in that case.
You know, you're giving this person. I didn't see them, but I guess the people that, you know, I talked to, you know, they had lots of instances of getting well yelled at. You know, really just having to sort of deal with that, and also talked a lot about how, you know, I guess this is something that's increased sort of post-pandemic. It's not just during the pandemic. So, you know, I just thought that was really fascinating.
So if they're quitting at record rates, where are they turning to?
Well, I think part of it was that, you know, there's a lot of places, you know, you could go. I guess unemployment was really low. But I just think a lot of them just wanted to get out, you know, of these jobs, you know, of these stores. And you know, that was another statistic, you know, from Korn Ferry, you know, talking about how, you know, turnover had gone up to 95%. Again, this is for part-time employees, but part-time employees are the majority of all, you know, frontline retail workers. So just think of that, you know, especially from you're trying to staff a store. I mean, you know, what's that job like anyway?
Well, so Devin, let's go through those numbers again because it really underpins the story here. So the COVID years made things worse. So according to Korn Ferry, before 2020, turnover for part-time retail employees hovered around 75%. Since then, it shot up to 95%, and it hasn't budged, which has at times led to understaffed stores. What does this mean for the companies that are trying to serve us? I mean, I've talked in the past about how when I walk into a store to buy deodorant or toothpaste, I think to myself, this is such a bad experience. Why don't I just order this on Amazon? And I think that Amazon's a winner in these cases.
No, absolutely. We didn't get so much into, you know, what it's like for the companies themselves. It's more from, you know, the frontline employees, you know, from their vantage point. But I can't help but think one of the reasons why, you know, customers go into stores and, you know, and they're kind of like sort of, you know, you're ready to fly off the handle, you know, if they encounter something they don't like, is that, you know, they almost feel like they're doing these stores a favor because they could order something on Amazon, and everybody knows what Amazon's, you know, been doing to sort of retail generally. So I think those two things are, you know, are connected.
What about some of the smaller brands? How are they grappling with this?
Well, again, we're looking at it more from, you know, from the standpoint of, you know, the retail workers, but I think everybody's kind of in a bind, you know, with a lot of these issues. For instance, we talk a lot about shoplifting and you know, how to respond to that. And, you know, in some cases, you know, the associations that represent, you know, retail companies all talk about shoplifting going up. From the standpoint of the, you know, the frontline employees, it's kind of like, well, what do I do? I'm getting paid minimum wage. Do I step into this thing? And some you know, employees are like, heck no. You know, I'm not going to do that for minimum wage. On the other hand, there are some employees who are kind of, hey, wait a minute, you're stealing from my store, you're stealing from me. They want to step in, so everybody's sort of conflicted. And I think it's tough. How do, you know, the companies haven't really figured out how to deal with this, but there's not a lot in it from them to get, you know, to have employees mixing it up with shoplifters.
So you and Diana spoke to a lot of people who work in retail, and not necessarily currently, some who haven't even gone back because it's taken so long.
Well, they've gone to other retailers.
Exactly. And I'm wondering, What was it that was the straw that broke the camel's back in some of their cases? Was it the uptick in shoplifting? Because as you guys write, it's always been something. It's always been an industry with high turnover for part-time employees.
Yeah, I mean, but certainly, going from 75 to 95% that's a pretty, that's a big change.
Yeah.
But sorry, what was the question?
Well, like what's this? What was sort of the straw that broke the camel's back with moving things so much during the pandemic? Like, what was it that you think increased it from 75% to 95%, based on the anecdotes that you heard from the subjects you interviewed?
Well, it's just a confluence of things. I mean, a guy who was a good example was that guy Henry Demetrius, who worked at a Walgreens in Brooklyn, and he said, among other things, trying to even define, his job. Well, he could be a janitor, or he could be. He'd want to be taking passport photos. He'd be, a cashier. He'd be stocking shelves, and then he's going to be robbed. By somebody who's got his hand in his pocket, like maybe had a weapon. And he just said he just completely stressed him out. So I don't think it was any one thing. People talk about. So it's a confluence of things.
And there was also a woman that y'all spoke with who actually worked in the Bronx in New York, and it was at a children's clothing store, but she was having to deal with people complaining about the prices of some of those items, and her having to deal with that and trying to tell them, like, well, this is the cost of what it is.
No, more than one person talked about it. Just, the woman in the Bronx, she was shocked by how much prices were going up. And the woman at H&M, was saying, hey, we don't set the prices. I mean, the workers, sympathize with the customers, even when the customers are maybe yelling at them or certainly getting upset at them about it.
But that's something that has always puzzled me as a customer is like when you see people complaining to these people who work in the stores as if they have some sort of control.
They're not the ones setting those prices.
They're not by any means the ones setting these prices. Big picture, and I asked what you think it means for these companies, but you can't have a staff that turns over completely in a year. I mean, it just doesn't work.
Well, I can't help but think that companies feel like they're in a stronger position now. I think Walmart, just announced that they were cutting salaries in some cases, but I think with unemployment, going down, that workers are going to feel like maybe they can't just leave these jobs because there's going to be another job. But still.
I also see, and I don't know if this has been your experience too, Devin, and Carol and I have talked about this a lot, Jess, the way that when you're a customer, a lot of what employees used to do has now been sort of, I don't want to say outsourced, but has been. It's outsourced to the customer, whether that's checking out or whether that's like, at the airport.
That's a really good point.
Whether, weighing your own bag and actually like putting the ticket on your own bag and stuff. It's the rise of automation. And I wonder if these companies are just going to say, it's too expensive to have these employees quit all the time. We're going to automate everything.
Well, the one thing I've noticed, Tim, is that I guess with the sort of spike in shoplifting, CVS and some of these other companies, they don't seem like they have, as much automated checkouts. So.
Yeah.
But that's got to be the trend, and I think that's I can't help but think that makes customers feel a little weird and maybe a little hostile towards actual employees because look, I'm not even dealing with you anymore. I don't even have to. So.
Well, this is a great piece. It's The Big Take. I encourage everybody to check it out. It's available at Bloomberg.com/Big Take. Devin Leonard, Senior Global Business Writer for Bloomberg Business Week. He wrote the story along with Diana Bravo. Check it out at Bloomberg.com/Big Take. Business Writer for Bloomberg Business Week. He wrote the story along with Diana Bravo. Check it out at Bloomberg.com/Big Take.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up Friday. The Dow, the S&P, NASDAQ all ended in the green for the week. However, it was a losing week with the S&P 500 in this week, down by 1.3%. But the S&P did move higher after a three-day drop, eking out a gain today of 6 points, up 0.1%, ending the week, heading into the weekend at 44.57. The Dow today up 75 points, up by 0.2%. And in a choppy session, NASDAQ held on to a 12-point gain, up today by just about 0.1%. Apple shares did move higher today. Apple had a gain of 0.35%. Apple moving higher after a rout that erased $190 billion in value only a few days before the unveiling of the iPhone 15, new smartwatches, and the latest iPods. Again, today we did have, and the latest AirPods, I should say. Again, today we did have Apple up by about 0.3%. 10-year yield, 4.25%, with a 2-year there, 4.98%. Spot gold down 50 cents the ounce to $19.19. And West Texas Intermediate crude up 0.5%, 87.31 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Bloomberg Business Week is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more.
All right, Tim. First came the crypto winter, then came the fraud by FTX founder Sam Bankman-Fried. Now come the lawsuits, of course, from the SEC against cryptocurrency companies, which have run into multiple hurdles for the government agency, one of those being Grayscale, which recently won its legal fight in its push to launch a Bitcoin ETF, but there's still a number of things that need to play out in the coming months for that. But tensions do remain between the SEC and a volatile industry that has grappled by scandals and, of course, these crypto meltdowns. So who better to speak with us when we're talking about this particular corner of the market? Joining us now is Kenny Estes, Chief Executive and Fund Manager at Diffuse Digital 30 on Zoom in Chicago. Kenny, thank you so much for joining us. I kind of want to just get your first take here. When it comes to a lot of the challenges that the SEC is facing, how do you think some of this plays out? Because there's so many questions, as Tim knows as well, when it comes to regulation and what this really means when it comes to the crypto corners of the market.
I'll tell you what, if I knew how it would play out, I'd be making a lot more money. But I will say it's not going very well for the SEC. You've already mentioned the Grayscale decision, which was a pretty clear repudiation of the SEC's policy of, let's just call it enforcement versus rulemaking. So that's going the wrong way. They recently had a big upset in the Ripple case as well. There's a pending one with Coinbase, where they're basically suing them for being an exchange without being an exchange in simple terms. I'm not holding my breath that's going to go very well for them either. So generally, I think the current crypto crusade is causing some, let's just call it heartburn at the SEC, where you're starting to see the financial services industry used to think the SEC, their word was the law. And you're starting to see more and more, that's not necessarily the case, that it's starting to embolden people to bring lawsuits from every corner of the industry against the SEC, which you just did not see historically.
So do you think, I mean, obviously Grayscale had a legal victory, but do you see any other prominent lawsuits actually having an effect on what these crypto companies can do?
The Coinbase one is going to be absolutely fascinating, right? They're pursuing a course against Coinbase. They're also doing one against Binance's U.S. arm. Those, they're saying, because these assets are securities, which, wink, wink, they're not necessarily securities unless except the SEC believes that they are. There's no law or case that has said that they are. And in fact, the Ripple would say that they're not. So then what are they? Whose purview does it fall under? It's going to be really, really fascinating to see how all of this shakes out. And I think we're going to have a lot more clarity on both of those cases, Binance US and Coinbase, within the next 3 to 6 months.
And This week, the CFTC actually brought enforcement actions against 3 decentralized finance firms and did signal that more may be coming. When you're looking at something like this, I mean, what do you think that means more broadly when we're looking at some of these firms that are in that space and what kind of challenges that means for them?
Totally. Not to be overly pejorative, but this is a bit of a pissing contest between the SEC and the CFTC right now. Nobody really knows whether these assets are going to be securities or whether they're going to be commodities. And the industry overall doesn't know what to do with that, right? The SEC is saying this is all under us, the CFTC, and the recent bill that just made it out of House committee is saying it should all be under the CFTC. So what do you do? And those are very different regulatory bodies, very different enforcement strategies. So we need some clarity onto exactly what we should be doing. And I think that at the end of the day, the courts can kind of do it, but it's going to be nip and tuck one case at a time. The better solution is legislation, right? Actually have a law go through to clarify all of this.
So is that what you would do if you were in charge?
If I were in
charge.
Yeah,
I mean,
sure.
seriously,
If
you're in the industry. You're in the industry,
Yeah.
so you have a lot of experience here. Should it be the SEC? Should it be the CFTC? Should it be legislators? What should it be?
I do think that it should be the CFTC.
Why?
I think that there's a lot of these are fundraising mechanisms, but the end of the day, and this is what you saw a lot in the Ripple decision, these are decentralized control, right? It's a large number of parties that control which direction it goes, and that is very much not excluded from being a security. So I think the CFTC has the better way to go about it. Now, the issue that you're going to run into is if we go that direction, now everybody, because it's a little bit easier to do a lot of things with the CFTC if it is a commodity, every company is going to start using blockchain style technology to operate their business. So there might be some interesting long-term implications where the SEC is truly defanged if we go in that direction.
We also heard from the Fed's Michael Barr, who made some comments earlier today about stablecoins without this sort of U.S. oversight right now. So he's calling for potentially, he was actually speaking at a fintech conference, but a regulator actually earlier gave guidance on banks on how they could sort of gauge these types of crypto activities. But whenever we're talking about this and these particular regulations that need to be placed, I mean, it's hard to kind of wrap your head around because there's so many different corners, right? So what do you think are sort of the main sticking points that are really a hurdle, especially when you're thinking about Washington and how they're trying to deal with this?
Honestly, I think the main sticking point for Washington and how to deal with financial services has a lot to do with historical precedent. For the last 60, 70 years, and to this day, the US dollar is the primary currency for the entire world. And most banks that transact it are regulated in some way, shape, or form by New York. Right. So what that means is we can take a very monopolistic strategy to any securities or any laws that we put in place and any regulation we put in place around these currency transfers all over the world. That is very much not a possibility in crypto. So what you're seeing is there's this kind of clash between Washington and regulators who used to be able to do everything unilaterally, and now they're trying to do things unilaterally, and you're starting to drive a lot of the innovation, a lot of the smartest people I know offshore. You're driving them outside of the US, which is causing significant drain from some of the best technologies on the planet.
Hey, where's the interest, Kenny, right now? I mean, last week, as a result of the Grayscale decision, we saw, at least when it came to flows, when it came to people buying, we saw the price of Bitcoin and other cryptos move higher. But in terms of, but since they've since come back down to earth after that,
Yeah, totally.
I mean, where's the next catalyst going to come from? Are you seeing excitement there? Jess started out by saying, first came the crypto winter, and I was thinking to myself, I think we're still in the crypto winter.
Crypto winter 3, yeah, exactly.
Or it's just like been the 2-year crypto winter. Like, where's the catalyst going to come from if it's not this lawsuit?
I think it's going to be the actual spot ETF approval. Because
Really?
right now, yeah, I do. Because right now, if you're, Main Street investor who just wants crypto exposure, you have very few good options, right? You can absolutely go set up a Coinbase account and you can go buy cryptocurrencies yourself, but that requires a certain level of technical sophistication. Or if you don't want to use an exchange, you've got to deal with private keys, you've got to deal with custody. It's all new jargon. It's a lot to wrap your mind around. But if you actually had a good solution that tracked crypto prices and you could buy it in your Robinhood account, it's going to open up a whole new world.
But I could buy it in my PayPal account.
You can buy Bitcoin in your PayPal
Yeah.
account. Exactly. Yeah. So, and this is interesting. I personally I'm not super bullish Bitcoin overall. I think Bitcoin's interesting and you certainly need to have exposure to it in case it becomes a global currency. But if you look outside of Bitcoin or even Ethereum, that's where the real innovation is happening. You're starting to see applications and innovators creating really cool solutions outside of those top two. You can kind of think of Bitcoin and Ethereum as in Web 2 world, you can think of them as like TCP IP or HTML, right? It's the technical infrastructure layer. But what we haven't seen, and I think we are going to see, is more of these kind of Facebook, the actual application that uses that infrastructure to drive real value down.
How long do you think that's going to take? Because I feel like a lot of people, will talk about the longevity and how you have to bet on whether it's Bitcoin or Ethereum. We only have about 15 seconds left, but I mean, how long do you think this will take to come to fruition here?
Oh, I mean, if I knew that, that would be really interesting. I would say that that's going to be the main driver. You're going to start seeing these applications come to fruition here in the next 1 to 2 years, and it's going to drive the next bull.
All right, Kenny Estes, Chief Executive and Fund Manager at Diffuse Digital 30, joining us. And Tim and myself here. Thank you so much. We appreciate it. Now let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. The Supreme Court is being asked to reverse an appellate ruling that would cut off mail-order access to a drug that's used in the most common method of abortion in the U.S. In an appeal filed today, Danco, the company that makes mifepristone, argued that federal judges should not second-guess the Food and Drug Administration's approval of the drug or the conditions under which it is dispensed. Food experts agree the expiration dates we find on food may be doing more harm than good. We get more from Bloomberg's Amy Morris.
Cornell professor Martin Weidman tells the Wall Street Journal the dates are less about safety and more about rotating stock. Often the so-called expiration dates say things like fresh until, sell by, or best by, and perfectly good food gets thrown away. The Food Industry Association explains those dates have become less of a guide, as was intended, and more of a rule. And in the UK, where there's more of an effort to crack down on food waste, those dates have been eliminated. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden is now in India, where he will be participating in the G20 summit this weekend. White House National Security Advisor Jake Sullivan spoke on Air Force One about the issues that will likely come up.
From climate to energy security to food security to global macroeconomic stability to being able to deliver public goods to people everywhere.
Sullivan says President Biden will also be meeting informally with leaders on the sidelines of the summit. The climate is expected to be one topic to come up this weekend. A new UN assessment on global emissions shows countries are largely failing to meet their commitments, putting the planet on course for catastrophic global warming. The report released today says governments must rapidly find a way to cut billions of tons of carbon dioxide. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, and NASDAQ managed to eke out a gain today. Turned out to be a 6-point gain on the S&P 500 index, buying into the close, up by 0.1%. The Dow higher today by 75 points, up by about 0.2%. NASDAQ up 12, a gain there of 0.1%. 10-year yield 4.25%, with a 2-year that's yielding 4.98%. Gold, lower little change, down 40 cents the ounce to $19.19. And West Texas Intermediate crude up 0.5%, $87.29 for a barrel of WTI. We heard Joe just talking about the price of oil today. As I mentioned, crude oil, West Texas Intermediate up 0.5%. Brent, the global benchmark, ending the week above $90 a barrel, $90.44, up by about 0.6%. Oil stocks, for the most part, higher today. ExxonMobil up 1.5%. ADRs of BP up 0.4%. Chevron up 0.3%. EOG Resources up 0.9%. And Pioneer Natural down by less than 0.1%. Again, recapping a move higher for stocks. S&P up 6, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Okay, I've got a question. What's got 697 horsepower, goes 0 to 60 in 3.1 seconds, and sells for $288,000?
Ooh, I need to know. I have a guess what it could be. Here.
Okay.
Aston Martin?
Yeah, it is. And it's whatever's in Matt Miller's driveway, I think,
course.
is the answer. What is this? Matt Miller, the Aston Martin DBX 707, is that what it is?
Yeah, absolutely. So the DBX was Aston Martin's first ever SUV. And you probably noticed that all of the luxury car makers lately have come out with SUVs. I mean, Porsche did it first like 20 years ago when they came out with the Cayenne, and it was a huge hit, and it has become their cash cow. So even car makers like Ferrari, who said, you know, at one point Sergio Marchionne said, we will never make an SUV. It's not in our blood.
And Lamborghini's got one.
Lamborghini has one as well, called the Urus. Ferrari's is called the Puro Sanguine or something, which means pure blood, which I think is ironic because it wasn't in their blood and now it is their pure blood. But Aston Martin's, in my opinion, is the very best. Now, I have to say, I haven't driven the Ferrari, so that's the only one that I haven't driven. But I've driven the Lamborghini Urus many times. I've driven many versions of the Porsche Cayenne. I've driven BMW's top-of-the-line Apex Predator XM, and none of them are nearly as good when it comes to the driving experience as the Aston Martin.
By the way, I should note, anyone who listens or watches us regularly knows exactly who's speaking. It is Matt Miller. He's the markets anchor for Bloomberg Radio and Television. And he's here with us in the Bloomberg Interactive Broker Studio. Sorry, Jess, go ahead.
The pros and cons.
So the cons are, because it's an independent brand, you know, it's not owned by Volkswagen or Stellantis or any of these huge conglomerates. It is handmade, that's a pro, but in terms of the tech, it's a con, right? It doesn't have a touchscreen capability, which my 2014 Porsche had a touchscreen, and 10 years on, Aston Martin still doesn't have that. It doesn't have wireless CarPlay, which sounds like no big deal, but it still has the old school big UBS jacks, so I can't hook up my phone to the car, and its navigation system that it has on board is very bad.
I feel you. My 2018 Subaru Outback has the same issue.
Yeah?
Yeah, it doesn't have the wireless CarPlay. You have to plug it in.
But you didn't pay $288,000 for that.
Fair point. That is true.
I feel like if you pay that much money, you should be able to expect top-of-the-line technology. And, of course, you don't buy this car for the CarPlay. It doesn't matter. You buy it for the engine, for the experience. You buy it for the status, right? Everyone knows it's extra special. There aren't very many other ones on the street. But you should, I think, get that other stuff.
What's been the reaction to people when you've been driving it around?
People, it's amazing, give me the thumbs up everywhere I go. I mean, they'll pull up next to me on motorcycles and give me the thumbs up. Guys walking down the street will give me the thumbs up. A mom at the daycare was like, "Hey, nice car."
That's better than the hand gestures I get when I'm driving.
Yeah, I mean, no, I am surprised. at the enthusiasm with which this car is met, because that's not necessarily the case when you're in a lot of other cars, a Rolls Royce or a Lamborghini, and I think that's because they're more common than this. You don't see an Aston Martin DBX very often.
Only someone in New York would say Lamborghini, and what was the other car you said that's
a
more
Rolls
common?
Royce.
A Rolls Royce and Lamborghini are more common. Only a New Yorker would say that.
Slightly more common.
Okay.
The other con is that since it's handmade in England, a lot of the stuff might break, and if it does, it's going to be very expensive. Now, I should note the engine and the transmission come from Mercedes, and a lot of that driveline technology.
What's the deal with that?
They had a partnership with Mercedes. Mercedes has owned bigger and smaller pieces of Aston Martin throughout history. Right now, Geely owns a big chunk of Aston Martin. The Chinese,
one of the top 10 car makers in China.
The Saudis own a big chunk of it, but Lawrence Stroll, the Canadian billionaire, owns the most of it, and he runs the F1 team, etc. So, if something breaks, it's going to be expensive. But if you buy a $288,000 car, as this one is optioned, I feel like you can probably afford the repair bills as well.
You're a tall guy. I know you had a hard time trying to fit into the Nissan Z whenever you were chatting with Carol Master and myself
Which I
a couple
loved,
of weeks
by the
ago.
way. The
Yeah,
Z
that was one
was
of your favorites.
amazing.
So this one, I'm guessing, was easier to
because
to
it's
get
an
in.
SUV.
Yeah,
it's a lot bigger. And, the Z was only a two-door, so I couldn't bring my 2-year-old daughter, Edna, with me in the Z. I can bring her in the Aston Martin. In fact, the rear-facing car seat, which my wife says is mandatory, fits really well, and you still have legroom in the passenger seat in front of it. This is the first car that my daughter has ever told me, "Daddy, go faster, go faster."
Wow.
Yeah.
So I guess it raises the question, Matt, about how practical the car is. SUVs, they get, they're so popular because people think of them as quote unquote practical. Put the kids in there, put the groceries in there.
Yes, I've done all of that.
It's not handmade in England and doesn't break down all the time.
This one is very practical. I've taken it to the grocery. I've been driving my daughter to and from daycare with it. It's got an oddly shaped trunk, so I don't think you could fit a lot of stuff back there, but it's very cool. You can swipe your leg under the back and it opens and closes for you. So when I have her in one arm and groceries in the other, I can still close the tailgate. And it has all-wheel drive, so it doesn't slip in the rain or the snow.
When you, an issue with driving our kids around is they just make an absolute mess in the car, especially on long car trips. When you're borrowing a car from a company like this, do you say, okay, no Cheerios for you, Edna, because you can't make a mess in this car?
I don't typically tend to change my behavior. I feel like Aston Martin has the money to clean the car. Now, I don't make much of a mess of it. Right now, we have just the car seat and a couple dinosaurs and some Moana stickers in the back.
So when do you have to return it?
I will bring it back right now. I test drive these typically for the week, and next week they're going to have a different one for me. Next week I'll have a Porsche 911 Carrera T to test out.
Give us a little preview of that.
Yeah.
I think it's going to be good. It's safe to say it's going to be exciting. But the T is like the base model of the Carrera. So the idea is none of the luxury frills that you don't really need. It's more focused on driving. It's much more lightweight, 100 pounds lighter. They take out some of the sound deadening insulation. It comes standard with a stick shift, a manual transmission, rather than the PDK double clutch.
How's the rear-facing car seat going to fit in there?
It won't. So actually, that's a conundrum for me. In a lot of the cars I drive and some of the cars that I own as well, I'm going to look for the ability to turn off the passenger airbag, because I don't mind putting a car seat in the front seat. Most parents will scoff, never do that.
Matt,
the reason you shouldn't do that is because the airbag is so dangerous. But if you pull out the fuse that enables the airbag, or a lot of cars have the ability just to turn it off, then the kid is safe in a big car seat in the front seat as well.
I should note, Matt Miller is markets anchor for Bloomberg Radio and Television. He's not a pediatrician with the American Academy of Pediatrics or National Highway Transportation
That is
Safety
true.
Administration.
That's true.
Just throwing that out there.
This is not investment advice,
Nor
is it child care advice.
Hey, but you know what, Matt? I would let you watch my kids anytime.
I would love to. I enjoy kids.
You're like the fun uncle.
Even more than I like cars.
Yeah.
That sounds great. We should do like a little, family car thing. That would be super fun. Matt, thanks for doing this.
My pleasure.
And
thanks
also
for
thanks
having me.
for bringing your daughter. It's
Yes,
so cool to
so
finally meet Edna
adorable.
in person.
Thank you very much.
She's in the studio right now. She's in the control room. She's watching.
Hi,
Having a good
Edna.
time.
She's actually been calling herself Moana lately. She thinks that's her name now.
I love it. Matt Miller, markets anchor for Bloomberg Radio and Television. He joins us periodically, and I wish weekly, maybe weekly now,
Right.
for What's Matt
You
Miller
should.
Driving. It's one of the favorite things I get to do here on Bloomberg Business Week. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Uber said to be working on a TaskRabbit-like service that will let app users hire people to conduct various tasks in an expansion beyond driving and deliveries. The potential new service is codenamed Chore, and it was discovered inside of Uber's iPhone app within hidden code strings. Stellantis now facing pushback on its latest offer to unionized employees after a top UAW leader said the car maker's wage increase, quote, was not adequate. This less than a week ahead of a strike deadline. Apple unveils its newest iPhone next week as the tech titan is contending with a growing ban on iPhone use among government workers in China, and a contentious new phone from China's Huawei Technologies is providing homegrown competition. Dan Ives is senior equity analyst at Wedbush Securities, and on Bloomberg Markets this morning, he talked about iPhone pricing.
We expect for the first time in years, the base prices will be up about $100 when you look at iPhone Pro, as well as on the Pro Max. And this is something where we expect minimal churn because it just keeps coming down to it is the gold standard phone across the world.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. Ives, by the way, is sticking with his $230 price target on Apple. Apple today up 0.4%, 178.18. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Jess Metton, she's Deputy Team Leader for U.S. Equities here at Bloomberg News, filling in for Carol this afternoon. Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Senator Nancy Pelosi, at age 83, says she will run for re-election next year.
Pelosi has plainly enjoyed her reduced workload since she gave up the Democratic leadership. She's been a strong supporter of Ukraine and critic of China, as she made clear in a recent Bloomberg interview.
China has been transferring technology of weapons of mass destruction to rogue countries. They've been violated almost every standard of access, of piracy. Need I tell you, Hong Kong, Tibet, Uyghurs, threat to Taiwan. So we don't have shared values, but we have a shared planet.
As Speaker, Pelosi managed to keep her Democrats, left, right, and center pulling together. No mean feat. In Washington, Irv Chapman, Bloomberg Radio.
The findings of a Georgia special grand jury are now public. In today's release, it was learned the jurors recommended charges against 39 people in the election case. Only 19 were indicted, including former President Trump. Senator Lindsey Graham was on that list and says he did nothing wrong.
This is troubling for the country. We can't criminalize senators doing their job when they have a constitutional requirement to fulfill.
Graham was not indicted. Neither were several other prominent people on the list, including former National Security Advisor Michael Flynn. The FAA is ordering SpaceX to make fixes after the flawed launch of its Starship system back in April, which forced the company to blow up the rocket. Bloomberg's Erica Herskowitz with details.
The regulator says the company needs to, among other things, redesign its hardware to prevent leaks and fires. It cited a total of 63 actions in need of remedy. SpaceX must implement all corrective actions that impact public safety. It must also apply for and receive an FAA license modification that addresses all safety, environmental, and regulatory requirements prior to the next Starship launch.
Again, Bloomberg's Erica Herskowitz. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Tim.
Thank you so much for that update, Nancy Lyons, Tim Stenivek, and Jess Metton. We're live in the Bloomberg Interactive Brokers studio. Jess and I were talking a little earlier. Believe it or not, we actually do plan this show with a great team of producers.
It's a great team, fantastic team.
We were talking about some fun stories we could do today, and this one really caught my eye. It's by our own Andy Hoffman. It's about John Lennon's missing Patek Philippe wristwatch has actually been found
Amazing.
in Geneva. What do you think?
It's incredible that, especially after all this time, that they would be able to find this. So this is something that, I mean, is definitely going to be one of the world's most valuable watches, without a doubt, for sure.
Well, not just because it's a Patek Philippe, which are,
But,
so
right,
expensive.
exactly. I mean, for one thing, there you go. But then John Lennon, I mean, it's incredible.
So there's a good story behind this watch. It was given to John Lennon by his wife, Yoko Ono, shortly before his assassination in 1980. The former Beatles timepiece is currently in possession of lawyers for an Italian watch collector who bought it from a now defunct German auction house. That's according to official legal documents from a Geneva court. Ono had given Lennon the watch for his 40th birthday, and a former driver for the Japanese artist is suspected to have stolen the timepiece a long time ago.
Wow, it's incredible when you think about just the background given it and just how much time has passed since then. But it looks like in June, a Geneva court ruled that Ono is the rightful owner of the watch, and the collector is actually appealing, and that's based on some of the latest court